here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 5th day of November 2013. A quick look at the numbers. The Dow down 17, S&P down 3, NASDAQ is flat, gold is down $5.30, crude is off about 99 cents a barrel. So let's see, that's red, red, flat, red, red. Got a lot of red going on. We had an econ report out this morning. Oh wait, QE taper coming earlier than expected. That might be the drag on the markets. We did have an econ report out this morning. Let's see how that worked out. The ISM non-manufacturing PMI. That is considered to be a high probability news event. You might have never even heard of it, but it is a thing right here. All right, the number they were looking for was 54.0. The number came in at 55.4. So what does that mean? Go here and read it if you really want to know. It's a thing they do, and it's considered high impact, so in other words, they take it pretty seriously. When you go to our econ calendar, which, by the way, you can download, you simply go to the home page at cfrn.net. For that matter, you can actually go to just about any page, cfrn.net, and on the right-hand side of the page, now that's if you have a browser that will actually take you places. This one seems to be a little uptight. There we go. Okay. I don't know. I don't use Firefox the way I used to. If you recall, I used to be quite the Firefox evangelist, telling you that it was the greatest thing. I don't use it. This is really odd behavior even for Firefox. Something happened on, I think it was version 14. Now, Firefox is a nonprofit, open source, developer, community browser. And I honestly did consider it to be the very best browser for a very, very long time. But it does seem like right about number 14, that's when the thing wigged out on us. And I stopped using it. I went to Chrome. And now, and Chrome's not, look at this thing. I mean, you know, now I'm curious. Is this a Firefox issue? Is this a CFRN issue? Is this a bandwidth problem? I'm going to go with Firefox. You see how quickly that came back in Chrome, and look at what came back in Firefox. I don't even speak that language. Okay, let's not play around with that anymore. Okay. So now you can see why I only use Firefox to access the econ reports on the toolbar. That function, as you saw, works just fine. Anyway, when you go to the home page, or any page at cfrn.net, down on the right-hand side, you'll see download our toolbar. Works on Chrome, Firefox, and Internet Explorer. And an unsolicited comment from the chat room, thank you so much, Iris, says, I really like your toolbar, and I have been using it a lot. Thank you very much for that comment, and thanks for using the toolbar. There really is a tremendous wealth of information available at the toolbar. Number one, you can listen to the radio station 24/7 as you cruise about the internet. Maybe you didn't even know we stream 24/7. We do the live show Monday through Friday from 12 Eastern to 2 p.m. Eastern. The other 22 hours a day and weekends for 8 years now, we stream the gospel message free to the four corners, to whoever is listening, and we've touched a lot of lives over the years around the world and it's just really an honor and a privilege to be a part of CFRN. And I thank you, all of you, each and every one of you, for choosing to make this time of day a part of your day, and for being a part of the CFRN community at large. You'll also get access to our feed. Don't worry if you don't know what that means. When we write something, publish something, throw up a new podcast, which, by the way, I'm only moments away from throwing up the first one in quite a while. It's not that we haven't recorded every day. I just haven't been uploading them with the regularity I established over 7.5 years. We talked about this yesterday, and I committed to getting yesterday's uploaded so that I wouldn't continue to fall behind, and I would just stay consistent going forward, and then figure out how to worry about, you know, the backlog, rather than just using the backlog as an excuse not to upload yet one more day. So I did the audio and video of yesterday's show. They'll both be, I've written the blog post that accompanies, and it'll all go up probably right after the show ends today, and then I'm going to turn right around and start in on uploading today's show. So you can always access those podcasts right here, along with any blog post. You can take care of all your Facebook business, your Twitter business, your Gmail, your Amazon.com shopping. Drop this down, read our daily newspaper, the CFRN Emini Futures. Follow us on Google+, Seeking Alpha, and one of my favorite parts, Daily Audio Bible. You know what? Words won't do it justice. Install the toolbar. It's free. Now you'll get a warning from your antivirus software that says, hey, you know, are you sure what you're doing? This could potentially damage your computer. That means you have good antivirus software. But not a problem. You have my word and the word of Jeff Bezos, the CEO of Amazon, the company, not the jungle. We promise you, because we put this toolbar together in conjunction with Amazon, you have our word that you'll find no spamware, malware, adware, badware of any kind. It's chock full of nothing but goodware designed specifically for you, the CFRN listener and Emini Futures trader. So download it. It's free. It's safe. You'll enjoy it. And as I mentioned, I think last week, I'm going to be making some additions to the toolbar. I'm going to be adding a couple features. If there is a particular feature, let me phrase it so that you'll connect the dots here. If there's a service that you regularly use on the internet, and you're surfing the net now, and you're using the toolbar, and you're really enjoying it, but you have to go outside of that window, outside of that toolbar to find that service that you use on a regular basis. If that's you and you'd like to see possibly that added as a link, a hot link, right to the toolbar, right up in here, send me some information. Shoot me an email, support@cfrn.net. I'll take a quick look at it and see if maybe it's something that will benefit the community at large. If so, I'll code that thing right in there. Okay, if you're here for the first time, maybe you went to a webinar, you clicked a link somewhere, you read an article, you were, oh, I don't know, at INO or the Market Club, or you were tripping around at the Motley Fool. However you found us, if you're here for the first time, we're so glad to have you. Those of you who are returning, thanks so much for coming back. Today, as always, we'll go to our good word for the day. After that, I'll take a quick look at the chart with you. We'll go to Michael for a complete recap of everything that happened in the live trading room today, and things went well. We had a good day, and so I hope you had a good day with your trading as well. And once Michael completes the recap, we'll go out to Las Vegas, Nevada, and talk to David Williams from pagetrader.com. Now, speaking of the recap For those who don't know, on our website, in the upper right-hand side of the page, right up here, okay, view live trading room results. If you click that, it will take you to 2 years worth of videos. We spend about 20 minutes each day. Here you can see 19 minutes, 15 minutes, 19 minutes, 27 minutes, 21 minutes, 18 minutes. So you get the idea. We've done that every day now for, well, all the way back to August of, it's on here somewhere, 2011. There we go, August 2011. So this is the page where you come to see what we've been up to for a couple of years. Now, there's another thing you can do too, is you can go out to twitter.com/CFRN. Now that's how you go about. You can then click follow if you want to follow us. But additionally, you can go through every tweet that we've made for the last 3 years, every trade idea that we've put out there, the good, the bad. And I did this chart, by the way, in case you're wondering, with one of the new filters that is part of Google Plus. I think. Yeah, it's, oh, gosh, there's so much new stuff coming at me here lately. Anyway, it's either something on my phone. Michael, how did I say I made this picture the other night? Oh, I used Awesome, which was a Google Plus. Yeah, a Google Plus release announced just a couple weeks ago, or last week, at their big meeting where they rolled out a lot of new stuff. And if you put a picture into Google Plus and video coming, you can do all sorts of interesting things. This is just an ordinary chart, snapshot, taken by me standing behind my desk during the partners meeting last Thursday night, I believe it was. Is that when I took this picture?
I believe it was, yeah.
Something like that. 30th of October.
Yeah, it was.
Yep.
Because we were...
8:31 p.m. Okay.
Oh, it was Wednesday. It was Wednesday. That's what it was. Remember, we moved the meeting because we were talking about it right before.
October 30th, Wednesday night. Okay. So anyway, guys, you can do a lot of fun stuff, and it'll make your pictures look great. And if you put it on automatic, it will just fix up. It won't do weird stuff like this, but it'll just make whatever photo you put in there look its very, very best. So give it a try. It's free. It's all part of what you get when you go over to google.com or gmail.com to get yourself a user. Think of it like this, because I know some of you are resistant. You go, man, I don't need another email. Okay. Forget the fact that you can get email at that address. Just forget that. You're going there to get yourself a username and a password, because that username and password will introduce you to all sorts of free, I know you're going, there's no free, all right, well, air quotes, free services that Google provides across the internet, Google Plus being one of them. Now, again, you go, I don't need another social network. I don't even use the one I have now. Good point. Facebook, for all of its goodness, and however you feel about it, for all that it offers, the quality of life that it gives us, think about this. Facebook is for all the people you know, okay? Your friends, your family, the people you go to church with. That's what Facebook is for. It's sort of a closed community. Google Plus, on the other hand, okay, is about people that you should know or want to know, but probably don't know at this point, at least not in person, okay? So Facebook for the people you know, Google Plus for the people you need to know. Because whatever area of interest you have, whether it's working on old cars or bowling or reading books by a certain author, or cooking string beans, or trading E-mini futures, there's a world of people out there who share that same interest and that same passion. But they're not on your Facebook because you don't know them. And Facebook has all these walls. Everyone's concerned about their privacy. Let me just be upfront with you. On Google+, there are no walls. There is no privacy. Okay? That's what makes it dynamically unique and different. You're not always freaking out about your privacy because you don't put anything up there that you don't want the whole world to see anyway. In fact, that's why you're putting it up there, is because you do want the whole world to see it. Now, you can segregate it off into circles, so you can have a circle of friends and a circle of family, but you can also have a circle that only includes those people that like to work on old cars or cook string beans or do whatever. That one specialized little area of your life that you're so passionate about. Imagine just being able to tap into a community of people who are as passionate as you are about that thing, whatever it is. You don't know them, you've never met them, but you're welcomed because you share the interest. And you don't have to request. Well, some of them you have to be approved, but they only want to make sure that you're a real person and not a bot. That's, in fact, if you want to join our E-mini community, you have to ask, and then I just approve you. Okay, it's, I don't, we don't run a background check on you or anything. Our Christian Traders Community Forum, that's just open to the public. Anybody can just come in because that has more to do with our morning devotional and that type of thing. People who become a part of the trading community, I want you in there because you are, in fact, truly interested about learning how to trade. Now I'm going to show you what that looks like just real quick, and then we're going to get moving here. I've already burned up most of my time anyway. The good news, I suppose, is I can just add more time at the end if I need it. Okay, but I don't want to hang the other guys up too very much. This is what the community looks like when you go there. Okay, E-mini Google Plus community. It's a complete resource guide to help understand and trade E-mini futures. We only have 44 members at the moment. I started that a long time ago, but I never did anything. Well, not a long time ago, a month or two ago, but I never did anything with it, and then I decided, you know what, we really should start putting this together because we can have a great discussion. Okay, this is not about specifically trading, the CFRN method, that type of thing. This is trader talk in general. Okay, we have the other community, which if you want to go talk about the things of God, you have that community. And then you have this community when you want to talk about the things of trading. Okay, and it doesn't have to be limited to the S&P 500 or the E-mini. It can be gold or crude or stocks or anything you want to talk about. Maybe you have an idea, maybe you have, something that you use that you'd like to share, or maybe you have a question, just for the general audience. And it can be, I haven't put up any real walls or barriers. I don't want any sales pitches. I don't want it to become that kind of a page. I want it to be really a page where there's a lot of information available, and traders can come and be treated with dignity and respect, and there's no bashing and name-calling, and they can just ask their questions and get an answer. And I don't want it to always have to come from me. I want others of you to step in and answer questions, and that's the beauty of it. You can do that, all right? So check it out. I assure you, Google Plus, whether you believe it or not right now, it is a part of your future. Okay? I know that some years ago I scoffed at Twitter, and I thought it was the most ridiculous thing I had ever heard of until Facebook came along, and then that took the cake, and look what's happened with both of them. Now, there is an interesting dynamic going on with Facebook. The kids have left. It is not cool to be on Facebook. Not if you're a kid, not if you're a young adult. They're gone. They say all that's left is, let's see, there's some angry right-wing people that spend all day sending out pictures and cartoons that poke fun at our government. get a lot of those in my stream when I log in. Scriptures get sent around a lot, and pictures of food, that's always really big. And sometimes there's men in funny hats. So, I don't know. I never thought I would use it at all, but I do use it now because it's my platform. I have an audience to reach, and so I utilize all of those various avenues because I don't know which one you're most comfortable with. So rather than forcing you to come do it my way, I've tried to meet everybody on their side of the street, but I'm telling you, for the very best experience, okay, one that will really enrich you. It can do things for you like LinkedIn should do professionally, and then it, just as far as your hobbies and special interests, really opens the door to meeting new people with new ideas. And check it out. It's free. You just go to gmail.com to start the process. That way you'll have a username and a password. If you never send an email, that's okay. You don't have to. But then you can pop right over to Google Plus and just start searching. You know, if fly fishing gets you going, just type into the search box, fly fishing. All of a sudden, you'll be looking at a page filled with people and communities from all over the world. They're passionate about fly fishing. You can go in and start reading the different discussions. If you don't want to say anything, you don't have to. Nobody's going to say, hey, who are you? Where'd you come from? Although somebody might say that in a nice way. Oh, hi, welcome. We're so glad you joined our community. If you have any questions, let me know. It's a pretty polite society. I'll give it that. And the internet used to be such an and I know it can still be in some areas, but it was so angry, and everybody hid behind these screen names, and it was kind of thuggish, but it's a kinder, gentler internet now. All right. Our good word for the day comes from James 1:4, and it has to do with looking forward to perfection. Looking forward to perfection. Part of that scripture, remember, says, so that you may be perfect. Really? Because if we're honest, this is going to be a problem, because none of us will ever be perfect. At least, I'm pretty sure I won't. And it's not for lack of trying. I've just accepted that I'm human. We're also going to always struggle with sin. Now, many of us have different definitions of sin. And I think right there, whatever convicts you, that's what you should be, not condemns you, but convicts you. That's what you should be paying attention to. God's Word tells us this. Look, God allows you to face trials. It doesn't say that He sends them. It says that He allows you to face them. He allows you to face times of testing so that you can learn endurance and perseverance, so that He can shape your character into what He ultimately wants it to be. Now, of course, that's a transliteration. In other words, we're able to endure trials because we think about the end result. In other words, what's the payoff? What's the payday? It's also interesting to note that the word for perfect also means maturity and completeness. God can shape us into mature believers so that we can become complete. Understanding that looking at the big picture and a look at the end result, we can have the inner joy of knowing that it's worth it. I really don't believe that soldiers going through basic training think it's a lot of fun. When I was a sailor in boot camp, I was not a happy camper. As a matter of fact, we often resent whoever's in charge of us, whether it's a master sergeant or a chief petty officer. The person that's putting you through this misery, you can't wait to get out of boot camp so that you can take care of them, right? But when you get out on the battlefield and you're actually victorious in battle, there is suddenly a great amount of gratitude and a warm feeling turned towards those who put you through or allowed you to go through, and in their case, forced you through. It's pretty ugly stuff. It's pretty tough trials. You know, for sports, football, same thing. I don't believe that football players getting ready for the season like the two-a-days. It's misery. But when game time comes and they're victorious, there is a keen sense of gratitude. Everybody loves the coach now. You were cursing him under your breath yesterday, but today he's your hero. By looking forward to those good times, that light at the end of the tunnel, that gives us a sense of joy even in the midst of the trial. Knowing that God is doing something to better shape our character into more of the person that He wants us to be. Most of all, never forget the ultimate destination of being with the God of all eternity. No trial, no pain, only the joy of being with Him. Now that, my friend, will be perfection. And that's our good word for the day. Moving to the chart, S&P 500 E-mini futures. I won't spend a lot of time here because we need to get moving forward with the recap. Michael's standing by for that. These are still last week's zones. I've left them here, I think, for an obvious reason. These were the highs yesterday. All right, this was the Globex Open Sunday night. We went up and hit the upper zone from last week, early yesterday. This is 6 a.m. Pacific time. Came back down to 1757, which is where we had our tweet on Sunday night, conserving long above 57. Nice 3 3/4 point run. Back to test the zone. Back up to 62.63. Back to 57. And then we had a live on-the-air trade that we gave out yesterday during the show to consider being long from 1760 to 1762. That paid off twice. Just as this trade paid off 1, 2, 3 times, this little trade paid off twice. The first candle gave us 2 points. The second candle, with just a little bit of a drawdown, also gave us 2 points. Actually, the second candle gave us 3 points. We then went sideways for about 8 hours. We dropped this morning down to 50.51 and rallied right back up to 62.63. And again, these are last week's zones. So really some great carryover sticking power they seem to have this week. By tomorrow, I'll get the new zones up on the chart for you. Now, we had a tweet last night to consider being short below 1752. That only went 1.5 points in our favor. Okay. We were looking for much more than that. I was actually considering that once we got below 52, that we should have a good target below us at the next weekly trading zone. And this is why you always use a hard stop. You always be aware of what's happening. And if the market was giving you every signal in the world that it was heading lower, and yet it reversed and then confirmed that it was in fact heading in the other direction, don't ever put yourself through this kind of pain. Okay? Maybe because you were aware of the zone, you took a point, you took 1.25 points, 1.5 points. I don't know where you were and how you were trading it, if you were using the slingshot or not. But again, 1.5 points available there. The only other trade I'll go over right now, well, I'll just show you the soybean trade that we outlined yesterday. That went perfectly from 60 to 52. And then on the treasuries, we had an official tweet out on this. Consider being short below 133.27. We came down yesterday. We rolled sideways for hours. But finally, at midnight Pacific time, actually now I'm on Mountain Time, because of the daylight savings time expire. Last night at midnight, we finally triggered that trade, 133.27. Our target Our target was only 133.22, 5-point target, okay, down to this zone right here. But 5 ticks on the bonds at 31.25 a tick, that's $150, so it's not a bad trade. Could we have stayed with it? Could we have trailed a stop? Absolutely. Would it have paid a handsome reward? Yes, that's pretty obvious. Watch this candle here. If we close, we've still got 23 minutes. If we close anywhere up in this area, that's a very bullish pattern, and we'll look to get long the bonds before this radio show's over. Let's just see how this hour closes. Michael, that's it. It's all yours. I've overdone myself. I may pull a muscle. I may strain something here.
All right.
You ready?
All right. Yeah, I'll take it. Don't
All right.
want you to get hurt over there.
Yep. All right, guys, here comes Michael. Daily recap, everything that happened in the live trading room today. Now, these are trades taken in front of real people in real time with real money. We trade with both hands on top of the desk. We call the trade before we place it. It's not one of those deals where, after the fact, hey, did you get in on that? We talk about the trade as it's setting up and where our entry will be if and it's very, there's nothing nebulous. There's no ambiguity. We know to the tick. Not only Michael, but every partner from Brooklyn to Bangladesh, as they say, or as I say, knows the entry to the tick. It's not an area, it's not a neighborhood. Unlike my tweets, which often at night are areas and neighborhoods, what we do in the mornings is extremely precise. Okay, so here's Michael. He'll tell you more about it. I can see the spreadsheet.
Okay. Here we go.
No red. That right there. That tells me that's a good thing.
That is a good thing.
We only have 6 red days in the year.
5.
I think I wrote about that last night.
5.
Go ahead.
1, 2, 3, 4, 5. 5 red days. 5. That's good though. 5, 6. It's okay. All right. I'm going to start up the recording. All right, good afternoon, everyone. Today is Tuesday, the 5th day of November 2013. Today, our results were consistent, much like our password. I think that was last week. But anyway, we made 10 ticks on soybeans, 10 ticks on crude oil, 10 ticks on gold. Okay, that is how we ended the morning session. It took us 25 minutes and 2 trades to get to our daily goal of $100 per contract. Okay, we took a total of 9 trades today. So for the month of November so far, we are up $625 a contract. That is better than, well, if you divide that by 3, it's better than 4 points a day average. Okay. Gross, that's the gross. The net is better than, well, let's just call that $450. It's actually $449 per contract. If you apply an $8 commission to every single trade we've taken so far, we've taken 22 trades, which is actually low. For 3 days worth of trading, 22 is kind of low. That's usually 2 days worth of trading. But, we don't trade if the market doesn't provide it for us. So we're up $449 per contract net in the first 2 hours of the day, the live trading so far for the month of November. Okay, you can see last month we were up $6,400, so we've got a little work to do to get up there, but it'll happen, or it can happen. Okay, we'll go with can. Let's see, trades. Let me start out with the crude oil. Now, if you have not taken the free trial with us, you should go to www.cfrn.net/apply and sign up for the free trial. In the free trial, you get access to everything you see here. You get access to our live trading room. You get access to our weekly trading zones. You get access to Dwayne and I. You get access to the charting platform, the indicator set. You get to use the whole thing. And we highly recommend that if you're going to take the free trial, download everything. go and do the download, get it on your desktop so you can actually see it and get a feel for it. We don't necessarily expect that you're going to know what you're doing, at the end of your free trial. The first day will usually be a little overwhelming because there's a lot of charts. I trade a lot of different markets depending on what's moving. Today I only traded 3. Actually, I threw 1 trade on Russell too, but it ended up being a break even. But still, that's a lot of markets. For folks who are generally used to trading maybe just the ES, which is really slow. That's a lot of markets. Anyway, that's what to expect. All right, download the charting platform, download the indicators, and send me an email. Ask me for my layout, and I'll send you my layout so you'll be right up to speed. Now, moving on to the trades. We'll start out with crude oil. Okay, we'll go left to right. Crude oil is what we did most of our trading in this morning. When it opened up here, I said I wanted to see a close up above this level before I was going to go long. We finally got a close up above that level right here, and I drew a trend line down the tops, and we had an up close above the trend line. I got long on the up close above the trend line, and then when it moved up here, I had moved my stop to break even. It came back, took me out of break even. Then it had a direction change. All right. Now, how do you know there's a direction change coming? Well, typically I will draw a box like that, like that, like that, like that, and say, if we do not close up above this box before the green line gets into the cycle, and right here you see the cycle get into the green line instead of the green line getting into the cycle, then that's a direction change. That's topping action. It did top out and it changed directions, and we took the short trade right here. We took 10 ticks profit on this. That's what gave us our 2-point equivalent. So right here, we could have stopped for the day right there, but we didn't. We kept going. We took 10 ticks profit there. A lot of the guys in the live trading room got into this trade with me, got short with me here, and took more than me. All right. I just wanted to get the 2 points out of the way, and I took the 10 ticks profit right there. I will always take 10 ticks profit if I have the opportunity to. I'll move my stop to plus 10 ticks. And as you can see, as the green line got down into the cycle, it pulled back again, and it started to move down again. All right. We took another short trade over here. We got a break even on that one. Took a long trade here. We got a break even on that one. And all these boxes were areas that I wanted to see it get to. Get up above, get down below before we could start trading. That was really it. The crude oil got really choppy in here for quite a while. And then when it finally did give us a long trade, a long opportunity, it ended up taking us out at break even. Changed directions, and then it was just really choppy again. All right. There's not that much more that we can do in there with the crude right now. Okay, it's been pretty messy all day. The Russell has been a little bit of a puzzle today too, because it's been in and out of weekly trading zones, and the ES has also been in and out of weekly trading zones. So we had, I don't know, back here somewhere, I took 1 trade on the Russell today, and it doesn't look like I marked it up, but it was a break-even trade anyway. I don't know where it was. It was probably, it was right over here. It was this down close right over here below the trend line, and I took the trade, and we were sitting at plus 3 ticks profit, and I got out of it quickly because I realized that I hadn't looked left. And I ended up taking a break even on the trade. It did work out, but I ended up taking a break even on it. In all the morning trading here, though, at 9:30, we opened up and we just didn't have anything in here that we were able to trade because the ES was going into a zone. All right, then for some reason the Russell started to move down quickly here at 9:39 to 10 o'clock. Then we had the news event here at 10 o'clock, and it popped all the way back up and regained all this movement that it had on the way down. And since then, it went sideways, hit the weekly trading zone, came back below it, and now it's back up above it. It's been almost impossible to trade the Russell today because the ES has been in and out of these 2 zones that are very close to each other all morning. Okay, that has been problematic for the Russell. So let's move on to gold. We ended up plus 10 ticks on crude oil, flat on the Russell. We took that 1 trade on the Russell. On the gold, we took a couple of trades. In here, we were looking for it to get down below this level or above this level before we could start trading it. It finally did get down below this level, but on the news event here, and it moved down quickly. All right, a few minutes into it, we could get the trades off here, and we took a short trade right here. We ended up taking a break even on. We took another one right here, and we took 10 ticks profit on that one. That was pretty much all we did with the gold, because from there we had to wait a half an hour before it could get up above this level. By the time it did, the slingshot was not giving us any opportunity here. Okay. The live trading room ended right in here this morning, and we did not have another trade on gold. All right, so we ended plus 10 ticks on gold this morning, plus 10 on the gold. The soybeans, we had a couple of trades on soybeans. You can see in here, this was yesterday. In here in the soybeans, I had drawn in these levels. Now there was another level that I had drawn in up here, but I moved it down. I reused my box. I recycled it. I was looking for a down close below this level. I think it was actually even a different level. It was a down close below this level. That's what I was looking for. And we got that down close here. Then it started to pull back, gave us some nice divergence down here, and a down close below the trend line. Once we got the down close below the trend line, we got short. We took 4 ticks profit on that. We had told everyone at this point that we expected it to get down to 52, and it got right down here to 51.5. Pulled back at that point, and at that point we were looking at, well, first, these levels that I had drawn in here, these boxes, but beyond those we're looking at 1244. All right, now it's still on its way down to 1244. If we drop down below this level right here at 1247.5, I think 1244 is it's kind of a gimme. That said, we took this short right here and we took 4 ticks profit. We moved our stop up to break even to plus 4 ticks once the green line was down into the cycle and it was time for it to pull back. We did the same thing here. We took this short right here on a down close below the trend line with the bearish divergence, and we moved our stop to plus 6 ticks when it was right down here and the green line was down into the cycle. All right, it did keep going down. It continued down, and it looks pretty weak right here. The cycle needs to reset and work its way down. I think that would push it right down to that 1244 level. All right, so I would be looking for that on the soybeans. All right, currently. On the ES, we sorry, that was my dog growling in the background in her sleep. On the ES, there was one shorting opportunity this morning right in here that we had highlighted several times in the live trading room. At 1252.25, we said on the down close of that bar at 1252.25, that would be a short trade. And there was plenty of opportunity to get into it, and it went 7 ticks profit, turned around, came back up through the weekly trading zone. The next opportunity, if we had not had a weekly trading zone above us, might have been up in this area right up in here, right up here. Okay, right there. But there's a weekly trading zone right up above, so no go. Currently, I'm looking for the ES to get up above this level right here. All right, if the ES gets up above there, that would be great. I think it would have. What I really want to see is the ES. I don't want to see the ES in between these same two zones tomorrow. I'd really like to see the ES way up above this zone right here. Okay, getting out into some area where we can actually trade without worrying about zones. Speaking of areas, in the copper there was one spot right here. Now this I did after the fact this morning. I didn't see it happen, and it was after the fact. By the time I did see it happen, it had already gone 4 ticks, and I said it was too late to get into the trade. But we're looking at stuff in here, and we're saying that it needs to move down below this level. It did move down below that level. I believe it was below that level. Well, that level used to be down here. And I said it needs to move down below that level. And it dropped right through it. Gave this little opportunity, and then we changed it around, made it above that level. And right in here, I didn't want to go long here until we got up above that. We put the new swing high in, and there was not really anything that we could do in the live trading room. It was it's pretty much done by the time the live trading room ended. All right, so that's it. Let me bring my spreadsheet up, and we'll look at that again quickly. There is the spreadsheet. Now we We are currently up $625 a contract. In the 3 trading days we've had so far in the month of November, we're up $625 a contract in the live trading room. If you are on the free trial right now, then you're going to get something in your email that tells you what it takes to become a partner. If you are not on the free trial and you've already taken the free trial and you want to know what it takes, send us a quick email at support@cfrn.net and we'll tell you what you need to do. That's it. That's all I got. If anybody has any questions, you can contact me at 949-423-6464. All right. There you go, Dwayne. We can head out to Vegas. Recording.
All right.
Off.
Okay. Good job. Thank you very much. Again, how long did it take to get those 2 points?
25 minutes today.
25 minutes. Okay, now, guys, again, we don't do that to brag or to boast. We do it to show you that it is a reality. More than a good idea. I mean, that, 2 point a day thing has been bandied around the internet and the world of trading for a long time, okay? Probably since the E-minis were invented and first traded. But then, I'm going to say to some degree, to stock trading, to options trading, there's some mathematical formula, something that caught on and was catchy, and it became, well, if I could just get this many points a day and compound my earnings by using my earnings to trade more contracts but remain consistent at that figure, number, whatever benchmark is established, that it becomes mind-blowing where that leads you, okay? The thing is, it's been always that. It's like the urban legend. It's like Sasquatch, Everybody's heard of it, but few have actually seen it. In other words, many people have heard about getting 2 points a day on average on a consistent basis in trading, and that being a very powerful business building technique. The reason it's like Sasquatch is because even though everyone's heard about it, very few people have actually seen it on their screen. And now for lack of trying, they just haven't seen it. Now why is that? We know the market has plenty of movement every day. Pick a market, and there's enough movement every day to capture 2 points. Doesn't mean you're going to, and just because it goes the distance, still doesn't guarantee that you are going to capture 2 points or the equivalent thereof in some other market. But we can say, and there's very few absolutes in trading, but we can unequivocally say that in the world of E-mini futures and the S&P 500 even, which seems to be the quieter of the bunch these days, but still, based on volume, the most favorite. The movement is there. So that leads me to ask you this question. Did you make money today? I don't want you to type in an answer. This is like when the preacher on Sunday is preaching against, I don't know, drinking or pornography, and he goes, I'm going to ask a question, but please don't raise your hands. See, he doesn't want you to be embarrassed. So I don't want you to type anything in. I just want you to answer the question to yourself. The question is, did you make money today? Period. That's a yes or no question. If it's anything other than yes or no, you're pulling your own leg, okay? Now, I'm just being brutally honest because I want you to not do that. It's very easy to get ourselves caught up in this cycle of if, then, when. We're going to crack this trading thing. We're going to do it, when the new internet connection comes in. They're bringing faster internet to my area, and once that's in place, I'm going to get going, or when the computer gets here, or any number of different things. We've all had our own excuses if we've been around trading for any length of time. So if your answer is yes to my question, then good for you. If your answer is no to my question, okay, what I want you to do is I want you to sit down and figure out why. And again, you don't need to tell me, because it's your business, not mine. And then ask yourself that day, every day for the rest of this week, okay? And then at the end of the week, or however, whatever your measuring stick is, if your results aren't positive, then find out why. There's a reason. It's not because the market isn't real, because it is. And if you, unlike some of these schemes out there on the internet where these money-making opportunities where you actually make the money or think you made the money, but then nobody ever sends you a check or anything. If you make money trading E-mini futures, they really will send you a check, okay? They'll cut a check, they'll wire funds, they'll do whatever you want. You got to pay a fee for the wire, etc. But if you make some money in the market today, if you make $100 or $1,000, you can call Bert if you want, if he's your broker, and say, hey man, I had a great day, made $1,000. Could you wire me out $500? I need a little walking around money, see me through the month. And he'll say, okay. And then he'll go through whatever he has to do on his end to make that happen. So we have a movement, we have a market, we have a concept, a business opportunity, if you will, that is real. There's sufficient movement. And if you're on the right side of the trade, they'll really send you money. Huh? I'm serious. Dead presidents, man. You can spend them at the grocery store, the gas station, the Gap, at the Apple store, any place you want. It's real. So it's a real opportunity every day that pays real money. So my question was, did you make money today? I want you to think about that. Not because I want you to feel bad or beat yourself up or any of that. No. What I want to do is if you start probing and asking yourself these questions and being honest with yourself, you'll get to the bottom of this thing. And remember, you originally got into trading or got interested in trading because of all that it represented. The opportunity to own your own business, to work, literally anywhere. I don't want to paint a picture of you on the beach with your laptop digging your toe in the sand while you put on some monster trade. No, that's not what I mean. I mean, you have the freedom to open your office anywhere, downtown, in a high-rise, in a church basement, or in a bedroom of your home that you convert to an office. That part of the equation is also true and factual and real, okay? So I don't want to, because sometimes we can get all mired up in this failure to just make the simplest of goals every day. We forget why we originally got involved. Back up. Get a big picture look again. There's tons of people around the world who made real money today. There's also people who lost real money today, okay? And so the answer to your question might be twofold. When I said, did you make money today? Your answer might be no. And on top of that, I lost money. Well, see, that's just like the guy at the Subway shop who just bought the new franchise. Okay, he's got to stock that place with meats and cheeses and breads and all of that. And he bakes the bread and lays out the food. If people don't show up and order sandwiches, he loses money. He doesn't just go home sad because no one came out to buy a sandwich today. He goes home discouraged and a little worried because he actually lost money because some of that stuff went bad. It's got to be thrown out now. He's got to buy more stuff and hope that somebody tomorrow will come to buy a sandwich or a lot of sandwiches. I want you to follow my thinking here, okay? Because if you don't actively work to get to the bottom of this thing, sort it out, figure it out, you're gonna stay locked in this circle. You'll continue to be that hamster on the wheel. Get off the wheel, okay? If you need help, it's available. reach out. support@cfrn.net. You know, your opening line could be, dude, I'm a mess. Okay, been there. Tell me your story, whatever it might be. You always have confidentiality with us. We don't ever spread your name or your story, you know, around in any inner circles. I mean, Michael and I, of course, talk if we're working together to try to help you, or even Bert. See, Bert's available too, toll free, 866-928-3310. If you're struggling with some issues in your trading, trading can be very lonely, but it doesn't have to be. That's why we have a community, okay? And you might think, well, I'm not a partner, so I'm not really a part of your community. Hey, if you're tuning into this radio show or this podcast, you're a part of the community, okay? And if you're in trouble or need help or you're discouraged or worried or whatever it might be, okay, don't go it alone. Don't go it alone. Email us, support@cfrn.net. Call Bert. Get the conversation going. He's a great guy. You'll come away feeling better about your situation. He may not be able to solve all your problems today, but I promise you, you'll feel better and you'll know that there is hope. So one last time, 866-928-3310. Now real quick, yesterday in the after show, we were taking a look at crude. We were looking at it on a 30-minute chart. We looked at this big down move that we've been involved in. Okay, let me get the charts here real quick so that you can see what I'm talking about. Mike Reed is in the house too. Beg your pardon?
I said, and Mike Reed is in the house too.
Hey, Mike. All right, let me get the mic real quick too. I didn't even know you were here, man, or I would have cut all that short. So, Mike, you go ahead and come on in, and David, we're going to forego the formal introduction today. You just pop on in too, for the sake of time. Now, yesterday in the after show, we were talking about the crude, and we talked about what was important is after that big sell-off, okay, we were getting leg retrace, and then all of a sudden, we get this. We get a higher high, okay? So we have to ask ourselves, is this simply a deeper retracement or the beginning of a reversal? And then we walked through, and it's on the video. You can go to the YouTube channel and watch this from yesterday. All right? We measured it out. We showed here that we had failed to put in a higher high. Okay? And then look what happened as we went through the overnight session. Leg retrace, what an orderly march. Leg retrace, you see that? It kept going and going and going and going and going. And based on everything that we talked about yesterday in that video during the after show, so again, go to the YouTube channel and watch it, you could have been legging this thing all the way down based on exactly what we covered. So I hope you caught that yesterday, and I hope you were able to catch some of this today. Mike Reed, are you there?
Hi, Dwayne.
Hey,
yeah,
hey,
it's
hey.
a nice little stair-step down pattern. Just
That was beautiful. I believe you'd call that the slinky.
looked like there might have been a few of them there.
Yeah.
But just kind of a stair-step down type of deal, yeah.
Okay, so the stair step is different from the slinky.
A little bit. Slinky just kind of have a little bit like an arch. Remember how they would go down the stair step, make a little hump up, round out, and then roll over again? That's kind of the action in a downtrend. Where you'll get a little pop, and then slide to the right as they swell out a little bit, and then down, roll over again, and head back down the next step.
Gotcha. So, David, are you with us?
I am. Good morning,
Okay.
Dwayne,
All right.
and good morning,
Before
Michael.
We
morning, David.
forewent the formal intro today, guys. This is we got Mike Reed from PageTrader.com with us. We also have David Williams. Wait a minute, I got that wrong. Mike Reed from TradeStalker.com. There we go. And David Williams from PageTrader.com. I think I got it right that time. Welcome to both of you.
Thanks
Glad to have you with us.
very much. And we are a lot alike because we both really appreciate the Wild Wild West, the old show. So there's a lot in common there. You can interchange our names.
Yeah. Artemis,
Well,
how you doing?
I'm doing good, Michael, and how are you? Are you enjoying the uptick in volatility and the tradability, or how are you finding
We
progress?
are, yeah, and this is kind of, I told you guys, kind of like last week with good volatility in a somewhat narrow range so far this week, only into Tuesday. But yeah, it was good so far. We had some levels this morning, and they reached the last level at 50.50 to 50.00, and turned right up there.
Well, that's close enough for trading.
Yeah, in 30 minutes, and a lot of times you get a move like that, you'll get a reaction, kind of at least a counter trend move of some sort within 20 to 40 minutes of the opening, after the so-called dumb money or whatnot comes in, and then they take them the other way. So that kind of happened on time also. When they got above 54, we also had 54.5 to 54 on the way down, and that when that was cleared and then held on a dip, that was trend had changed. That was I call it transition, so it was changed things all pointing up at that time, at least for
At
a
what
better
price,
amount.
Mike? What price are you?
When they got back above the 54 and a half level.
Okay.
The initial bounce off of the low might have been 54 3/4 or something, but when they got back above 54 and a half after the second low pullback, not to a new low, that was transition to the upside.
Now, I'm going to throw this on a 5-minute chart because that's probably a little closer to what you're looking at.
Sure.
I had that on an hourly. Now, this is 5 minutes, guys, and so your number again, 54 and a half.
There you go. Yeah.
Right here, boys and girls. Now, you see what happened here. I'll let Mike explain it to you, but let me show it. I'll do that part. Can you still see that, Mike?
Yeah.
Okay, so kind of help folks understand. Now, I've got this set at 54. I believe you said 54 and a half to 54 3/4.
We had 54 and a half to 54, and if you spread that out a little bit, you can see that when they got it back above that, then they held the 54. There you go. And then, yeah, right there was the hold.
Right.
You can see it better on you can see it on a 5-minute chart. You can see it better on a little shorter time frame. But in any case,
2 minutes? 2 minutes, 1 minute?
Yeah, that 2 minutes or 1 minute. Either one's fine, I think. But right in there they held.
2 minutes, and there we go.
There you go. So you got that little pop up, and then it had a little tiny pullback there, and
Right
held
there.
that. So there's my transition, and the way I see it. And then with the turn up, that was, more to the upside. So, and we still have an 57 level was, and I believe, I think I saw it marked on your chart, was it? No, I'm sorry, 59 3/4 was the bounce high, and this
Right
last
here.
pullback kind of held that same area, and that would be potential transition back to the downside if they break there.
Okay, I want to get this scrunched up. I've got to go a little smaller here so everybody can see the whole thing. All right, so we've got a swing high on the day, 62 1/4. This is that initial swing high that you
There you
talked
go.
about at
Yeah.
59 and
Draw a line
3/4.
across that. Right in that area.
Now, guys, no, this isn't the after show. This is Mike talking. And a lot of what you hear me talk about in the after show, it's stuff that I learned from Mike. Price coming back down through this area creates, right here, Now, in the after show, you hear me call it a window of opportunity. Okay? But once price penetrates this area, okay, it's taken out the potential support provided here, and then your window of opportunity is all the way down to right here, where you would expect support to be waiting, because when price pulled back to 1757 the last time, buyers had a nice little joyride, 5 points right up to 1762. And if we were to pull a fib on this move, we would see that that pullback didn't quite make a 38 from this low to this high. It did make the 24. It went sideways, and then we pushed out into new highs.
That 17, I'm sorry, John.
Mm-hmm.
That
ahead.
1727 is pretty similar to what currently they're at 59 3/4.
You mean 1757?
Right there, yeah, because that was the early high area. Then that was broken, held on a pullback. So, yeah, and also there were some early highs below, but
Don't want these early highs right in here?
Yeah, and so that area was to be watched for support once broken. Resistance turned support. So once they took that out, then that was kind of a you can see, but that was the, you know, I think I hear you say look left, and that's a lot. That's one of the simplest and easiest ways to find the areas where the transitions or last straps, I call it, areas are at, and you know, support or the break, and you can get transition to the other side. So
now, on a break of this level, you still have the potential. You know, there's potential for support here, and you could argue even to there. So really, the prime window of opportunity for me is very small on this move, but I want to get below that low and above this high. Now, that only leaves from 1757 to 58. Plus, I have to go a tick or two below that low, and I got to be out a tick or two below this low. So if I'm going to short this thing and come down, I've only got 1 point to start with, room to run. Now I got to shave a couple ticks here and a couple ticks here. All I'm left with is, you know, a shot at 2 ticks in the middle. So for me, this opportunity, while it is a window of opportunity, there's not enough on the reward side for me to trade this. Now, if I'm going to go ahead and trade the whole thing, there is. But if I'm trying to narrow it down to the place with the fewest obstacles, I'm going to isolate this window, and then it's going to be a trade that I go, okay, that's definitely a window of opportunity, but it's not a big enough window for me to get involved with. I'm going to wait until the market presents something that has, for lack of a better term, more meat on the bone, right?
mm-hmm. Yeah, that makes sense.
And that could be in this little area right here, from 56 to 54. I can work with that, okay, if we get down into this area. And potentially even inside of this area here, but you got 2 areas that have the potential to represent support, and these are, of course, something you want to be aware of too. So like this little window here almost fit perfectly in between the support line and this fib line. So that I like. If we come down and take out this 62 and take out this area at 54, then we've got a good ways that we can drop. So what else? What other thoughts do you have on this, Mike, you can share with us?
That's about it for now. The well, the 62 area, the high so far. Well, it's just below yesterday. 64, I think, was the high. But
Let's take a peek at a daily chart. Yesterday, the high, yep, was 64. You're right.
Well, we've made we had a high and then a pullback. We had a lower high and a pullback. A decent pullback. We had another lower high and then ended up taking out have another day where they take out today's low, I would start to think we're getting some toppy action. But other than that, we're still, I don't know, it's going to stop it up here. But still looks like a choppy two-sided range, and good buying coming in on deeper pullbacks, and we'll see how they act as they get into new high territory. They didn't seem like they liked it up there yesterday for very long, until the very end of the day. So
We've been sideways to down for 6 days now on this Globex chart. 1, 2, 3, 4. Yeah, today makes the 6th day. So today could be a make or break day. If we get a close below Friday's low, I think that's important. Let's see, that would be, today's Tuesday, Monday. Yeah, Friday's low or Wednesday's high. Breaking either one of those will be important. Of course, you know, there's a lot of room for support. We've had a nice leg up, and we could get a retracement. If we would get an ordinary retracement, which seems to be difficult to get a good retracement these days. But we talked about this yesterday. The 24% retracement is going to come in right about where our BBC is, and so that's potential for support. And then right below that, we've got the 38% retracement at 1720, 1722. Are those numbers that you're looking at yourself, Mike? 2022 area on the downside?
that's that's down there a ways, but that's
It is. It's quite a ways.
for
Our playing field this week, though, from the highest weekly zone to the lowest weekly zone, it's only 63 points. It was only 70-something last week, but we still had good two-sided action back and forth. I mean, we had a very productive week trading inside of a small playing field. This week, already we're having, today's Tuesday. This is where we opened Sunday night, and so that was a little tight, but today we swung from zone to zone back up to the zone. And keep in mind, guys, these are last week's zones. I've got them still up on the chart today on Tuesday because of how, you know, they've had such carryover strength that we'll probably by tomorrow I'll go ahead and pull them down and get the ones up for the new week, at least a couple of them. But again, a narrow playing field, 63 points. So,
63?
But as long as you have, 63 from the highest weekly zone to the lowest weekly zone.
Oh, okay.
But
So,
I mean, you can
but
have a
you're-
lot of nice, swings inside of a 63-point range.
Yeah, but that's not an expected range. That's just the maximum.
Right.
Okay.
Yeah, we wouldn't expect it to. I can't remember the last time we closed above or below the highest or lowest weekly zone. On the S&P, we actually did it last week on the yen. We closed below, and that's the first time we've closed below any of the zones. I think it's probably been a year, maybe 2, since it happened, but it does happen, and so you always have to be prepared for that. We don't trade against that specific characteristic of the zones anyway. It's just something that after publishing them for a period of time, I started to notice that somehow we always manage to stay on the playing field, even when it's a small field. So, well, David, you're mighty quiet there, sir.
Well,
What's going
I'm
on
just
with
letting
you?
you guys have the court,
Yeah.
so to
You
speak.
got anything you want to toss in here? Any thoughts on the S&P?
Oh, I just well, they're moving up, you know.
One day.
Michael, did you?
Nope.
I want to hear it. I want to hear it from the man.
Oh, really? Okay, S&P, it seems like it's moving around. Thank you. No. I think our outlook is kind of unchanged at this point. We are looking for a multi-week sideways to lower off of, we had originally had forecast the week of October 28th as a top. This was a reflected wave deal. And we think that under normal conditions, and we know that we're not really under normal conditions, but I'm going to, I'm looking at it through those eyes. We would have a multi-week sideways to lower movement off of that weekly top. So that's the broadest picture that we have. And then shorter term, we were expecting the market to, and we did trade the market from, we had an entry at 1768 for a forecast decline to 1746. Nice size move. 1746 was due on Monday. It came one day early on Friday. We expect a multi-day bounce off of that completion. They got down to 1747. So we're in day number 2 of, for us, what is a forecast advance off of this initial bottom. But even though we have this forecast advance, our bigger picture is that we don't think we're going to be seeing sustainable closing new highs at this point for a couple more weeks. Now, that's our outlook. We don't have a current trade that we're in with regard to the longer-term picture. We're going to see how they handle some of the stuff and wait for the next opportunity. Sometimes you just don't know what your next opportunity is going to be, and sometimes you get an idea of what it might be. But right now, we're in day number 2 off of the bottom for the forecast for November 4th to be a bottom plus or minus a day. We normally would get, a decent move up off that. We've had a pretty decent move up, and I'm curious to see how they handle the remainder of it. So that's basically it. That's everything we have up to this point, but no new outlook except for sideways to lower on from a weekly viewpoint.
I see. This would be if we stopped here, it would be a third lower high, and that would, and then
Say that again.
This would be a third lower high, a high, and then a lower high, and then another bounce to a lower high. And
What time frame you talking, Mike?
this, are we on a daily? We went back.
This
up
this one's a daily, but I've got a daily and an hourly up and a 2-minute. You want this is the hourly.
Well, let's see. I'm just off the top of my head where we went from. At least I'm thinking. Well, at least swings. We had 70.50, and then we had a 20+ point pullback. And we went back up to like 66, and then had a decent pullback, and then we went back up today to 62, I think, so far.
Yeah.
Am I right on that? Okay.
Yeah.
Am I right on
High
this?
today was 62.25.
So those are the kind of.
Now that's during the day session.
Correct.
The actual Globex, the official. This is good for anyone who's new to trading. The official high for Tuesday, the 5th day of November, is 1764. Because the Tuesday session started last night at 6 p.m. Eastern. That officially becomes, for the record, Tuesday. So it can be confusing if you're new because you hear one person quote one number and somebody else has another number. And so you typically, when you hear, if you're listening to NPR or your local talk radio station, when they quote the numbers, they're always reflecting the cash market, and they are reflecting the Wall Street hours, the day session as we call it, from the opening bell at 9:30 to 4 o'clock in the afternoon. That's when the cash markets are traded, and those are the prices that are quoting. Because you might be learning to trade E-mini futures, and you know where the market was, at the closing bell, but yet you hear a different number on the radio, and you're like, whoa, wait a minute. So you're calling the station up to inform them, but they're talking about a different animal. So anyway, Mike, I know you got to go, and you always want me to let you go gracefully, and I don't really know how to do that, so I'll just say, get out.
Okay. All right, guys. I'm out of here.
All right,
I'll be
brother.
back.
We love
I'll
you,
be
man.
back,
Have a
guys.
great
Nice
day.
to chat with you.
You guys too. I'll be back.
All
Take
right.
care.
Bye-bye.
See you, Mike.
Bye, David.
See you. He's the only guy I know that has been trading markets and has there's a kind of a caveat to this. I know somebody who's been trading a lot longer than even him. A fellow that we know by the name of Peter, who's been in the markets actively since the 70s. Now, that's a really long time.
It is.
That is a really, really long time. I mean, I want to go over and say, stop. You're through. It's over. Okay? That's a really long time to be trading. But I've been doing this for 24 years. In actually March of next year will be my 24th year in front of the markets. Every single day the markets are open, and most Saturdays and Sundays for one reason or another. You're going to be looking at your screen. And it's a really big waste of time, I've got to tell you. No.
I had a passing interest in 2000. I was doing things with some stocks and some equities, and that sort of heated up and
Sure.
evolved into the radio station in 2005. But shortly after launching the radio station, I began to move away. Well, actually, we spent the first year of the radio station still involved with equities, still fighting the naked short selling thuggery going on between a few, I don't know, well-heeled billionaires who will remain nameless, Mark Cuban, and the SEC, who was duplicitous in this crime, heinous as it was. And finally said, you know what, you can spend the rest of your life fighting this battle that doesn't look like you're going to win. And even if you do win, it's going to be a hollow victory because there's no payday. Or you can get focused on a market that is clean, and it's not rigged, and it's not manipulated, and there's no front running, and no pumping, and no dumping, and it's just man versus market, which we turned into man with market, because that works better. That trying to beat the market every day, that'll just wear you out. Much better to work with the market than to try to beat it. So that's how we got from there to here. That's our story. But we haven't, so we don't, you definitely have us with the 24 years.
Well, it's not a competition.
Every day in front of the market. 2005, so that's 8 years, closing in, I guess, on 9. And then if you count the prior stock days, I guess you could say 13 years. So that's actually longer, 13, 14 years, longer than I realized now that I'm sitting here tallying it all up. You'd think I'd have figured it out by now. Wow.
Huh.
I'm going to have to buckle down. All right.
Anyway, but Mike Reed has been trading, I think, for 30 years. I'm not sure if that's the number, but that's a really, really long time to be trading. And you have to find, a lot of us, it sounds weird to say it, but a lot of us would be interested in the markets even if it had nothing to do with money. I can definitely say that about myself because I'm interested in the nature of the market. I'm interested in the fact that it's doing these moves and these things, and I just refuse to believe that they're just willy-nilly meaningless. I don't know why I refuse to believe that. But there's a part in me that just refuses to believe that, probably much in the same way that people that write books about the random nature of the market refuse to believe that the market is anything but random. And it would do all of us maybe some good to examine our beliefs. Like, what is your belief about the market? Because a lot of what you believe about the market is already the case. It's already dictating to you about how you trade and how you view it and so on. So there is a certain part of me that just as a I wouldn't say scientist necessarily, but a person, a researcher, somebody looking at studying something. I would probably be doing this even if I had some other work to do that I had to do to earn a living and so on. I'd probably be in the markets even if they were just a phenomena and I was just watching them, right? I mean, because I like many, many others, find the markets fascinating. Of course, when you add the possibility that you could earn a living or could invest in markets, that adds tremendous, interest to it because maybe you could find a piece of this river that you understand and that you could put to work, and then it could really become interesting. But as it really lays out, you really can invest in the markets, obviously, and you really can trade them intraday and longer term and so on. And you can also study them to see what it is that you individually can see. Because I believe, and I know it's not even a belief, everybody has a different way of perceiving things, and the most ordinary guy on the street might actually have a very astute perception about something, even though he may, as an example, he may be homeless. Maybe he's a man sitting on the side of the road that doesn't even know about markets or doesn't care at all, but once having been shown it, a part of his brain lights up, and he says, now wait a minute now, and he's starting to see things. So everybody does have their own perception. I certainly know that it's a fact that because I've sat with so many traders. I'm sure, Dwayne, you've been involved with others as well, and everybody perceives things differently. Some things are easy for others to see that you point out, and some things are more difficult, like pointing at a bird in a tree to a friend. And there's a lot of branches and there's a lot of leaves, but it's plainly obvious to you that there's the bird. And yet your friend is going, I am not able to see what you're seeing. Where is this bird? They just can't see it because somehow their perception is accentuating something other than what you're accentuating. Or have you been
They see the bird. They see the bird, David. They're just messing with you.
Oh, they're just messing with me. Okay, well then this explains a lot. Thank you. It explains a lot of my conundrums in my life in the past. Oh my goodness. Thank you for that. That solves
I know what you mean.
a number of life
it's really
problems.
frustrating when you're like, right there. How can you not see that?
Mm-hmm.
But,
have you ever been in a restaurant or a bar where a song is playing and you say to the person with you, oh, I really like this song. And the person says, I can't even hear the song throughout the music, and yet you can hear it perfectly because you already caught a little piece of it, and now your brain fills in the blanks, and you can just hear that song, even though it's through all the noise and the people clinking their glasses and, whatnot. All that is going on. Have you ever been in that situation where they just can't hear the song? And you're saying, no, sir, listen, just listen. There it is. And you're humming it to them. And they're just looking at you like, Now that I know they're messing with me, though, for your explanation, and again, that makes me feel better about those many times that's happened to me.
Yeah, it's the same thing. So don't let it mess with you, man.
Yeah.
Now, mothers who are here, and fathers maybe to some degree, but I think it's really more a mother thing. There can be, a stadium of 10,000 people, and if a kid screams, Mom, that mom, it's like some kind of, instinctual kind of mom thing, radar. A mother can hear her child's voice from across a crowded room.
That's a great example. It's a good example.
And,
another one is, speaking of mothers, which I've noticed over the years. I wouldn't have noticed this without, you have to get outside yourself a little bit to notice other people, just for starters. But later in my life, I was able to see that women in general, often, and mothers in particular, what I've noticed, have the ability to actually multitask in ways that men have a great deal of difficulty doing. Men tend to, at least the men that I've been involved with in my life and in doing business and so on, in many cases we focus to the exclusion of many, many other things. And we feel like, hey, I really have to focus this deep and this hard and exclude everything else in order for me to get ahead at this thing. And women, quite often and quite easily, it seems like, can actually do 3 different things at once. She can be standing there working on something she's doing, but she's also listening to a conversation that's going on TV over there, and she might actually be commenting on something. They seem to have the ability to very naturally, without they don't have the thing where they have to exclude the entire universe in order to focus on something, like many men, and I happen to be that way. Michael X, the trader we've had on the program before in the past, commented to me once, and I thought, wow, there is somebody else like me. He said to me, don't talk to me, or I don't like it when people talk to me when my attention is on something else. So, and it struck me, I said, wow, that's exactly, and for me, that's, as an example, TV. I could be with somebody in a room watching TV, and if the program is on and I have even the slightest bit of interest in it, if the other person starts talking and then doesn't stop, I can take small bursts of it, a little bit of here, a little bit there, but if they go into a long thing, it gets very frustrating for me because I'm actually trying to listen to the TV, and I actually do have trouble bouncing from the TV back to what the person, it actually becomes frustrating for me. And when Michael told me that, he said, I don't like it, I thought, and then I finally said to him, then you and I have a lot in common because I can't stand it when that happens.
So
I don't want
when
people
when that happens, do you get angry and act out?
Well, I mean, there was that one time where I set the portion of the house that they were on, a small flame had erupted. I'm not sure even where it came from, but it was a small fire, easily extinguishable with professional equipment. No, I've noticed that it does quickly ramp me up to a frustrated level because I'm trying to listen to what they are saying on the TV. Or as an example, here's another one. I happen to enjoy the ugly, brutal sport of MMA, which is UFC, the fighting thing, the cage fighting. I'm very happy to admit that it's not only
This is so bizarre that a skinny Jewish guy is a cage fighting aficionado.
I'm not a cage fighter, nor do I want to fight, but I have a friend of mine, another really thin, very genteel kind of person, turned me onto it. This was back in the early 1990s when it started, and I first had no interest in it. But then he explained to me what's happening, and he was right. It's a chess match between two people that have extremely good, in many cases, skills, but it does involve, hitting other people in order to express those skills. That's how they play chess. I mean,
that's what the Romans. That's the excuse the Romans used. Oh, it's just like chess.
Oh,
throw another Christian out there.
See, that's another thing. I thought I was being original there. It's kind of like a chess game. Anyway, I got into it. I enjoy watching it. I enjoy knowing the fighters and their skills and seeing how they're going to handle this other guy and so on. And there's always the surprise. And there is a carnal, let's just be honest, there's a carnal thing there that you get some pleasure out of seeing somebody get their behind whooped if they have it coming or whatever. It's whatever it is. It's just built into people to have that. And I'm not excusing it or doing anything else. It's just there, and it's part of the pleasure of watching that, like boxing or whatever. So anyway, what was my point on that? That I was making a great point, and I've lost it by going into too much detail.
I'm sure you were.
It was the point I was making before, whatever that was. Just pretend like I just made a really good point and say, oh, wow, that is impressive.
That's the best I got.
It'll come back to me. Anyway, while I was that's what I was going to say. Watching the MMA, and other people in the room are talking, telling the fighters on the screen what they should be doing. Okay? That's what happens when you have people over and you're watching the MMA. They're always telling them what they should. Oh, you take his leg, twist it around your head, whatever it is. And that becomes very frustrating for me as well, because even though there's not a lot of talking going on, it's very distracting. So I'm not one of the people that have the ability to listen to you, talk to this guy over here, because I do tend to get focused, in the man way, where you try to exclude other things and you do it without even thinking about it. And it's probably a very good exercise to try to do the opposite and try to take in information from more than one source and see if you can deal with it and work through that issue, because it's a lot of men think and operate that way, and a lot of women are much more fluid with it's almost like they have multi-core processing. They can do more input and more output, where men need to clamp down on it and kind of contract. We kind of contract around that one subject, and we just get into it to the exclusion of everything else. I don't know how we got on that subject, but it's already done. We're through with it now, so we don't have to. We can pretend it never even happened, if you'd like. We can just start over right here. Good morning, Dwayne. How are you? Markets are sure moving today, aren't they? Fantastic. Something like that. Let's see what else. We could just address momentarily that the president has now, as opposed to coming out and saying, hey, really sorry about pushing my political dream plan for the world through by telling a complete bald-faced lie to the American public. He's not saying he's sorry. He's now just simply changing the story. Like I said, you can keep your plan if it doesn't change. Oh, well, that's the first time we've heard that. So anyway, I don't know how he got himself into this position in the first place, other than he made a very tactile decision, or tactical decision to make a run for the glory. Just push this through however it needed to be pushed through. And, doesn't matter, the 18, 20, 25 million people who get canceled and have to now pay double for their health care. And by the way, many of you are going to see this. Many of you are going to see this. You're paying $400 a month or whatever it is, $350, I don't know, and it's going to go to double. You wait and see. And the people you see this administration drag up on stage talking how happy they are about their cheap insurance are the people that you are paying for. He's not going to drag on stage the people who are paying double. Can guarantee you that. He's going to be dragging the people on that we're all financing. So this was his vision. He got it through. He knew from the beginning that in order to make this work, he needs these 15, that little 5% that he's blowing off. Well, that's the same 5% that this whole plan was going after. There was only 15 million people that were uninsured in the first place that he needed to get insured. And there's so many ways we could have done this without completely, so really it wasn't just about the 15 million people that he wanted insured. Because if he wanted to do that, we could have simply come up with a law that said pre-existing conditions are not allowable anymore. And we could have said everybody's going to pay a little bit more, not a lot, but a little bit more, to help those 15 million people. And then those 15 million people have insurance. It's that easy. Now, I know there's some more complexity to that, but that could have been done. But instead of that, it's a power grab with those 15 million people as the ostensibly the reason that he did it. The real reason he did it is because he believes in ever-expanding government, in growth of government, where they take over more and more and more of your existence. And healthcare is a real big part of your existence. And now they've taken it over. So I hope those of you who really adore this administration and how everything they touch explodes and turns into another congressional hearing and all that, I hope you really enjoy that, because you too are now going to be paying. And isn't it funny, the strange, beautiful truth behind human nature? They don't live like they dream, do they? He hates that there's these two classes of people, the rich and the poor, or the middle class and the rich, and the middle class and the poor. But he has no problem having the entire government not on the plan that he's giving us. So here we are again. They get the good stuff, and we, the little people, get the health plan that he wants us to have.
Yeah.
You know what I'm saying? How he's always dividing everybody. Well,
that's the
rich,
really big chink in the armor right there. That certain people are excluded because of
certain people. Every government employee, the congressional people, him and his family.
Well,
none of them are on Obamacare.
Not every government employee, but
no, but it's
select few.
It's the select few. The very thing that he supposedly hates and despises, so much so that he would want the country to be socialist so that everybody has everything that everybody else has. But it doesn't bother him at all. He's completely blinded to the fact that he just did that same thing to the entire country. First, by being deceptive about it. Secondarily, by keeping the gold, really good plan for just the select few up there, while all of us, so there's your rich and there's your poor, right in front of you. That's what I've been saying all along. The visionary, the person that has the utopia in his mind, the person that says, oh, it would be such a beautiful society if we all didn't have guns. Oh, but I noticed that you have a gun. Yes, well, I'm a celebrity, so I need a gun. There it is. There's the exclusion after exclusion. They never see the contradiction, the glaring contradiction. And that is a glaring contradiction. If it's supposed to be for everybody, how come you don't have it as well? If it really is supposed to be, we're all in this together, how come you and hundreds of other people that work in government don't have Obamacare? And since 85% of you don't even know what the law says, how dare you pass it on to us and then not have to live under it yourselves? What a bunch of crock.
You've got to pass it if you want to know what's in it.
Yeah, I know, and we talked about that yesterday. Anyway, it's just an amazing thing what this country just went through. It is truly amazing to me that we just went through this. We're not through it yet, and I'll tell you this, the left loves regulation. They want to put more and more regulations on business, more and more regulations on how you run your farm, how you run your business. Where are those same regulations when the commander-in-chief completely looks the American public in the eye 29 different times on national television, promises something he cannot deliver in order to get them to agree to go into his political dream and pass that. Where's the regulation on that? If we had done something like that in our business, we'd be in court, if not in jail. Where's the regulation on what he just did to the American public? Because I could go out into the public and I can find millions of people who will say, I thought I heard him say I can keep my health care plan. I thought I heard him say I could keep my doctor if I wanted to, period. I thought I heard him say that. There's millions of those. Where's the government regulatory body on that? Because they sure have enough regulations on business, what we can and can't do. I don't know. But the story's changing now. The story's changing now. Like I said, it's just like I said, you can keep it as long as it doesn't, change, a little bit. The truth of the matter is he needs those 15 or 20 million people that are going to lose their health care. He needs their double pay insurance now to make this plan work. He needs a lot of things to make it work, and we'll see how that works out in the end. But and my final statement on this is that I believe that in his heart of hearts, he knows exactly what he did. Of course, he's the architect of the plan after all. It's his signature legislation, so he certainly knew how it worked inside and out. He can't claim he's out of the loop on this one. But I do believe that President Obama, in his heart of hearts, believes that it's okay for him to have done what he did, misinform, and basically just lie about what the nature of the plan was. He did that with the idea in the back of his head that since it's really going to be, the ends justify the means. It's so good for everybody that it's okay for me to do this. He's let himself off the hook. It's okay because this is really going to be good for everybody. Just wait and see. We'll get all the other little kinks worked out, and you'll see how good this really is for the country. We need this. And so I needed to do what I needed to do to get this done. And that's where I think that's how he sleeps at night. He lets himself off the hook because he really, truly believes this is going to make things better for everybody. Even though he's got nothing but evidence from even the unions that have gave him $400 million, even them need exemptions from it. And he has exempted, again, another special class of people without exempting the small businessman. So again, he is not living the life that he claims he wants all of us to live, the life that he says that he's here to fix, all these social divisions, all the haves and the have-nots. But again, he's doing it right in front of you. He's got the haves, which are all these big businesses that now have exemptions from this because it's going to hurt those businesses, and the have-nots, the businesses where he says, sorry, you just got to live with it. There it is. So if you're far left, I would invite you to take a look at the difference between your vision, your utopia, your how it should be, and how you really live yourself. President Obama is not going home having his kids run up a lot of credit card debt, and then when Dad says, hey, there's $5,000 worth of debt on this card, little Billy, the president doesn't say to him, listen, I need you to go to the bank now and borrow more. That's not what he's doing with his family, but that's exactly how he runs the government. None of these visionaries, none of these people with their utopias live anything like they preach to us. Check it out for yourself. Watch them. See for yourself that that's the case. They don't see the contradiction. You can't have a gun, but I'm special. I need a gun. I'm Rosie O'Donnell. I'm a celebrity. I need a gun. But you're just a regular person and don't need a gun. So if somebody breaks into your house and wants to rob you and you try to stand up for your family and get killed by his gun, well, that's too bad. I'm a celebrity. Don't you see? It's different with me. Let me say something on radio here. Thank God for guns. Thank God that a criminal who only understands, the final thing he only understands is that he may die. Thank God I can take my gun out and say to him, if you don't get out of my house, I'm going to blow your head off. Thank God I can do that. And I thank God if I can continue to do it, because without that, you know what's going to happen. these visionaries, they're all going to have guns for themselves, and we won't. And there's the contradiction again.
I think there's a bumper sticker in there somewhere.
There is.
Outlaw guns, and only outlaws will have guns.
Yeah. Anyway, so check it out. Check your visionary friends out, see how they live their life, and see how different it is from how they want you to live in their utopian world. It's a bunch of crap is what it is. Thank you. That's my show. Good night.
Want to look at the markets?
Sure.
All right. What do you got?
Okay. Well, what do I have? High blood pressure probably at this point. Need to check that out. No, if you would, hand me over the charts and I'll show you a few things that I've got cooking here in the markets.
All right.
I'm cooking pretty good today, but I'll see if the markets are cooking as well. Okay, thank you so much.
Take it away.
All right, you should be able to see my screen. I've got a number of things here we're going to talk about. Not too many, but a few. Can you see that now?
I can.
Okay, so on the left-hand side, this is the S&P. We've already gone over this, but this is, I just want to recap real quick that this low right here, this is November 1st. That's the one day early that we were forecasting a bottom from the high up here. And all of this we expect, I'm just going to sort of draw a line. We expect this basically to be in a downtrend, sideways to lower. Under normal conditions, we would get that off of this weekly top. And this is where we declined. We came within 1 point of the 1746 target. This was given out a week and a half prior to them reaching 1768. So it was really well in advance. We had plenty of time to set up and see if the market was going to confirm. It did, and we were able to do well with it. We're now on our second day off of that bottom. Let's take a look at the middle chart here. This is a in-progress Williams Edge trade, which I've mentioned on the program, but I didn't mention the full target, and I can mention it now because we've come pretty close to it. In Williams Edge, we had mentioned the forecast was if the market got below 96.50, which is this level, and this was back over here when we did this, but if they closed below 96.50, the market would decline to at or near $92.70. This is the day right here where they closed below 96.50. They closed at 96.24. I don't know if a person could have gotten in right at that level or not, but if the market completes the move, that's about a $3,500 per contract move in just a short number of days. We've only had 3 days since then, since the close below. Today's low has been 93.07. Anybody who's taken a trial or is in Williams Edge knows that what I'm showing here is what we talked about in the meetings and so on. And this is a good example of a market that gets into a weak position, looks like it's already done, and then actually has a whole nother leg to go. And it's always a little nerve-wracking to believe that may happen. But this market, it wasn't too difficult to hold. We have a number of people that are going to try to continue to hold for the 92.7. We'll see how that plays out. And if a person wanted to, at this point, if you wanted to sell short somewhere, on a bounce or something, maybe to try to attempt the 92.70. By the way, the on-time, when we expected this to complete was the week of October 28th, which was last week. So we're now 1 week late for it, and they're sort of rushing down to complete it. It's possible that 93.07 is all they'll be able to do, but I'd like to think that we have a little bit more on the downside. And just like anything else, we move our stops down to protect open profits and so on. Then on the right-hand side here, gold. This is a move that already happened, of course, but we had a couple weeks back forecast that gold would have a move down to 13.15 after making these highs over here at 13.60. We got that move down. That's a sizable decline, but we have a further gold forecast that I mentioned on the program, I believe yesterday, but I'm not 100% sure, and we'll get to that in just a minute here. This was what it was, November 4th, on the left-hand side of your screen. December gold will retest 1305 on Tuesday, November 5th. It's actually the 6th is Wednesday, but we meant the 5th. So yesterday they made a high of 1320, and today, November 5th, Tuesday, they went down and look, 1305. There it is. They pulled right back into it, and this is a very important precursor for the possibility of a further advance. But we're not ready to do anything with it just yet. But this move lets us know, this forecast for this decline lets us know that there is the possibility for us to take advantage of a larger move or a tradable move on the upside. So I would not buy gold right now. I would wait. And if you want to, you're welcome to take a trial of Williams Edge. Check out what we think, how to handle this is. This was a trade unto itself from 1320 to 05. It's a relatively small one in gold, but it means a lot. It means a lot that they went down and completed that. Okay, let's move on from there. We've got, here's a losing trade. I like to talk about everything that we do because these are the facts. We had been looking to buy the bonds between 133.25 to 133.20, just a 5-tick range. They gave us that today. They did bounce. Certainly they got up to 133.26, depending on where you got in. But I'm not claiming anything as a potential gain of any kind because there is none. Because the real world includes putting a stop in. And in this particular case, the market did move down. I want to make a really powerful point for me here. We got stopped out at 133.18. So we went long, worst case at 25, which is about a 7-tick loss, best case at 20, which is about a 2-tick loss. But look what happens if you don't take your loss. Look what the bonds did here. They just continued straight on down, where now it would be $1,000 instead of just $167 or whatever it is, some big number. This is human nature wants to hold on for that. Human nature then says, well, maybe they'll come up and give me a break even, and on and on and on. You have to learn how to transcend what your human nature tells you to do because it's wrong. It's usually the worst thing to do. And the markets tend to operate in a realm that is counter to, what human nature wants. See, there's a few others here. That was crude. Underneath on the left-hand side here, this is a trade in the dollar that we just put on yesterday. But notice what happened here. We were trying to sell short at 80.78, and the market got to 80.76. So unless you were very aggressive in selling short, you would have missed this trade. This wasn't at or near. This was we were telling you to sell it at 78. Sometimes we'll say at or near, which means as it approaches it, you can consider getting short. This one wasn't that. And then to exit at or near 80.55, and today we got down to 80.57. So this is a nice move. As far as I'm concerned, it was a very tradable move, but we did miss it, and so we'll just pointing that trade out. Then we had one other trade between yesterday and today as well. This is in the euro. This required you to be up with your Ouija board at 2 or 3 in the morning because this is how the trade played out. We were looking for November 4th yesterday, buy the December euro between 134.90 to 134.75 for a quick advance to 135.15. Well, they got down to 134.80, right into our range that we wanted to buy, and the market's in a downtrend, so we were just buying a bounce, and the market zipped right up to 135.13, just 2 ticks within our profit target. So this was an actual trade. This actually worked out, and there is bigger things going on in the euro right now with the potential for upside movement. So even though this was a bounce in a downtrend, we do have a setup potentially for further advance on a larger move. So keep that in mind. We will talk about that in another radio program here. And then finally, I think there may be one more. No, that I think is everything we have, Dwayne, right now. Let me just double check. Yeah, okay. Those are the setups and trades that we have going right now. But listen, with volatility, everything is possible. The markets, once they're volatile, they give you opportunities one after another. And if you miss one, like we missed over here, or if you lose one, like we did in the bonds, you just take it in your stride and just get right back up and don't focus too hard on it. Just relax and continue taking the trades as they come. Okay, I'm going to switch this back over to you. Thank you for that. You should have that in a second here.
Okay.
There's probably a few others if you wanted to, Dwayne, to take a look at.
Yeah, let's take a peek. Guys, there's a trade out on the S&P right now, so check your messages, check your Twitter feed, however you track what we're doing. Now, on those bonds that David was just talking about, that big sell-off, what a nice drop. Now, the trade that we had put out, the tweet we had put out yesterday, consider being short below 133.27. It triggered at midnight Pacific time last night. Actually, I'm on Mountain Standard, but I haven't changed my, let's see, did my...
You don't need to change.
12:02, well, no, I don't change. I stay the same, that's right. Pacific time changes, so, yeah, so you're still, but the time that you're seeing on my screen, 12:02, that is, okay.
That's
so
1 hour later, yeah.
Yeah, exactly, okay. So, whereas I've been saying for the last few months, the time you see on my screen is Pacific time, the time you see on my screen now is Mountain Standard Time. We had a whole dissertation on this yesterday, if I should just switch my charts and my whole computer to Eastern Time so that it wouldn't confuse and conflict. And I had just got done saying I was not going to change anymore. I was just going to write it out, but now I've had a chance to think about it. So anyway, getting away from my whole point being is that the trade we put out, the tweet we sent, to be short from 27 down to 22, which was a zone from last week. Okay, that happened over, it took 1, 2, 3, 4 hours for that thing to unfold in the wee hours of the morning. But not only did it deliver the 5 ticks that we were looking for from our entry to our exit, 150 bucks. I like that about the bonds, 31.25 per tick. So 5 tick move, 150 bucks, but this thing kept going. And so, and there weren't any major pullbacks along the way until we hit this hour here. And I said if we closed bullish on this hour, that I would then start looking at some long trades in the bonds intraday, the remainder of the day. But even though we got a bullish close, that wick on top, I'm not too crazy about that. And so what we're going to need to see is a move above here, and then we'll have an interest in being long the bonds. If I make it official, I'll send a message out to everybody. So for now, we're just going to be happy that the market handed us this. And for those of you who had the skill set, and rather than just getting out at our official exit that we published, if you trailed this thing with a stop, good for you. That's trading. Now, the other one that we had talked about, you brought up the euro. We had an issue yesterday. Well, I'll talk about that in the after show. Where are we on the ES? Okay, on the ES we are at 59.75. Okay, and so we're looking. Still got a little more to go here. What market did you want to look at, Dave? I'll switch the chart.
Well, let's see. Let's take a quick look at it. There's a few others out here that people may have an interest, just as a review, or
okay,
just to hear anybody say anything about it. But
guys, if you have any questions on a particular market, go ahead and type them into the box.
Yeah.
Jerry has a serious question for you. When you say under normal conditions, do you mean not Fed inspired?
It could mean that, but normal conditions are where the market is playing out to its what we consider to be the natural moves that a market would make. So as an example, let's just say, for argument's sake, that the market would normally run from a certain low up to a certain high, and then find that high, difficult. It would normally find that high difficult to go through, and you learn over time by watching markets that these are kind of normal behavior. Again, like the cat. Men don't really like cats, but if you live with a cat without even trying, you start understanding when cats do what they're going to do, how they show their affection, and you don't even have to think about it. You just start knowing that they're going to act, and this is what normal behavior for the cat is. You know what normal behavior for your dog is, and so on. It's like that for the market. So anytime the market then starts doing something that is a little unusual, it puts you on notice that there could be a whole string of unusual about to happen, or it could just be a momentary glitch. I often will trade, if I can, through an initial signal of unusual behavior. If I do get stopped out, or if the trade even works but throws us several loops, I generally that sometimes will put some caution. That's my human nature. Put caution into my game, and I will wait for a little more confirmation of a move, and therefore probably do make less gain ultimately on that trade. I'm only too happy to do that. But so normal behavior for me is difficult to quantify, except that it's normal in the sense that I've been looking at markets for 24 years, and you can see over a period of time that this is pretty much normal behavior. Even some big moves are normal behavior. I mean, we sometimes forecast very large moves, which constitutes normal behavior. I think a better way of saying it, to be really honest, is that whatever it is that I really don't understand about the market is unusual behavior. I mean, is not normal. So what I tend to call normal is the stuff I understand. And if the market's starting to move in such a way that I don't understand, I'll say this is unusual behavior. In reality, if I had more knowledge about the principles that the market runs on and so on, I wouldn't be saying that that's unusual behavior. It would fall into normal for me. So it just means that the limits of my knowledge are really small, and that the market tends to trade in those limits for some period of time and then breaks out of those limits, and I then call that unusual behavior because I don't have an understanding of what they're doing. If I did, I would include it as I do other behavior under the normal category. So it's a little difficult to really quantify. Like the S&P, another good example with the big move up. We only told aggressive traders to get short up at 1768 for this decline to 1746. And it's a really good indication that I normally, under normal market movement, would take. But the way the market shot up off of the previous low, the weekly bottom a few weeks back, was unusual behavior. And I couldn't say for absolute sure that this was normal behavior enough for me to give that trade to everybody. So only the aggressive took it. So that's what it is. I mean, it's, the market reaches the frontiers of your ignorance, of your knowledge, and then beyond that you don't know, and you call it unusual behavior. So that's my best explanation for it. So the Fed announcement, I think, is a good example, though, that the questioner asked about the Fed announcement. There are a lot of very big professional traders that have really hurt themselves unnecessarily by trying to trade in front of these announcements. The payoff can be tremendous, but it becomes sometimes almost impossible to hold on to these big positions while the market is testing levels that you didn't even think they needed to test before finally going in your direction. And so I think it's wise to be very careful with those announcements. You can do what I do, which is to say, listen, whatever I do miss, whatever really big, great move that, after the fact you'll be able to go see, you could have gone here and gotten to here, that anybody can do that. Any idiot can do that. The real thing is that there's going to be 5 or 6 or 7 or 10 or more good moves that are available to you after the shakeout occurs on these Fed announcements. There's going to be quite a bit in a number of different markets. So just remember that, and that'll keep you, keep your powder dry, whatever that old saying really meant. I know what it meant, but I don't know why. Is that a gun thing? Your powder is wet when it's in the gun, or why would you be keeping it dry? What's that? Dwayne?
If your powder gets damp, it won't ignite.
Oh, okay.
It won't. It's like a firecracker. If a firecracker gets wet, you can't light it.
Mm-hmm.
Gunpowder, kind of the same thing. If your powder's damp, you're not going to fire. You're going to pull the trigger. It's just going to go click. Click. Spark. Not going to do anything.
Yeah. Okay. So anyway, I guess that's my best explanation.
Now with modern weaponry, that's not so much the case because you're using a different type of firing mechanism. The keep your powder dry goes back to the days when the guns were called, I think they were called flintlock, because there was actual flint involved that when you hit flint, it makes that little spark that would ignite the gunpowder. But modern, and I'm not a big gun guy, but this is just my rudimentary understanding. Now you have a firing pin that there's no spark involved anymore. So, and your bullets, the way they're built, I don't think you got to worry about your powder getting wet. But it is a good saying, and in trading, what it means is you've got X amount of resources available for the purpose of trading, and while there are all sorts of opportunities that come along on any given day, depending upon how much capital you have to work with, you don't want to get involved in 3 or 4 mediocre trades when suddenly here comes that beautiful textbook trade that you love and that you do very well with, but you can't take advantage of it because you have your funds deployed elsewhere. So that's how that term ties into trading, is that you want to make sure you have available resources to take advantage of the very best opportunity. So that's it.
Yeah. Okay. Let's see. We'll quickly click through a few of these here. So today's, listen, let me give you an example. Today's continued decline in the bond market I consider somewhat unusual. So as an example, and obviously because we had shown a trade earlier where we had gone long at a certain level, and this move is to us a little unusual. So that makes it interesting now, and our next bond trade will take into account that some unusual behavior occurred here, and one way or another we'll take that into account, and we'll see what happens. But that's a good example of that, and we'll, when we do have the next trade, we'll show you on the program, and you can see what we may have done differently. Maybe we didn't do anything differently, but we're put on notice by that. Let's see, the euro we talked about. The euro has just been all over the map recently, and we do have, I'm not going to go into the details right now because this is subscriber stuff, but we do have something going on the euro right now. We had the trade I showed you earlier, but this is there's a larger one that's underway potentially here, so we're going to keep an eye on that. We'll talk more about it as we get a little bit further into it over the next several days. Then we have the crude, which we talked about. We don't have to go over that. We could say a few things about the U.S. dollar, which is obviously of critical importance. A lot of people, I do want to say, a lot of people have said for many, many years that the dollar is going to completely lose all of its value and we're all going to be in it, whatever. And it hasn't yet completely lost its value. As a matter of fact, the dollar, although it's not in the very best shape it was just 2 years ago, it was way up high.
And it's considered by the world to be the safest currency.
Right. I hope it stays that way.
Yeah.
I really do. I have concerns as well. Just not 2 years ago. I'm sorry. I'm talking about back in 01. Sorry. It was really up there. It was at 121 level, and the dollar has indeed crashed from that level. And so let me take back everything I just said. The dollar was at 121 in January of 01, and it did in fact crash. I was looking at sugar and didn't realize it, and the market made a low of 70.80, 708, whatever, just in the last few years, and now is trying to move higher. So the dollar really has come down. And so whatever points I was going to make about it having not come down wouldn't make a whole lot of sense now because it has. But shorter term, and I'm sorry, I was looking at sugar and I was thinking it didn't make sense to me either, but this is live radio. I have to deal with this stuff in real time. Let's see. So with regard to the dollar, if the euro is going to reverse here, if the euro is at a bottom, then the dollar may likely be at a little top here for a bit, and we think that both of those are obviously correlated trades. It's up to you to decide which one you would want to take, but I think there's something in both of these right now. They're sort of at critical junctures, so keep an eye on that. I think the next couple of days will be interesting in the both the dollar and the euro. Canadian dollar, we're still on the sidelines. We don't have any insight into that market right now. Let's see, silver, cocoa, we're flat. We're just watching these. Copper is a market that we are interested in. Copper today made a slight new low. One of the reasons we're interested in copper is because we believe that, and we have believed for some period of time now, that there is an imminent, through October, we believed certain things were likely to happen in copper. And we've actually had a couple of trades which were successful trades. But the things that we were talking about have not yet happened. So we've decided to hold off until we get a clearer picture, because I do believe those things are going to happen. But they haven't happened yet, and we're in the 1 month late period, essentially for timing purposes of when we think those things should happen. So we're going to wait a little bit longer here, but there's a real, real knee slapper coming in copper. Remember Jerry Lewis? The Jerry Lewis. Did you ever like Jerry Lewis movies?
Oh,
Anybody
yeah.
A Jerry Lewis fan?
Yeah, I think everybody. How do you?
Actually.
He gets on your nerves after a while, but I mean, I'm sure there was,
The geisha girl, geisha guy.
Gosh, he made so
My Seven
many movies.
Uncles. The one movie with the 7 uncles that he played all 7 parts. One really funny scene is
Go ahead.
he's on the. I'm sorry, it just struck me. I remember one scene. I was very young, but it struck me as very funny at the time that he was one of the 7 uncles owned a small airline, and he would take people up in the airplanes and fly them, and somehow he ended up outside of the airplane with the people in it, and the airplane was running down the runway, and he was the guy supposedly flying the airplane, so he wasn't even in it. Anyway, there's a lot of funny scenes in that. What were you going to say, Dwayne?
That sounds very Jerry Lewis.
It is very Jerry Lewis. And
I
I ran into him. Oh, go ahead.
Well, I was going to say, what I found surprising was this year at the Arizona State Fair, he appeared. State Fair here in Arizona is quite the big to-do. It runs for 3 weeks, almost a month that the fair is in town. Now, we have the Maricopa County Fair at the same fairgrounds, but when the State Fair comes, they really drag that thing out, and they always bring in entertainment that it's not A-list talent. Sometimes it's not even B-list. Sometimes it's a foreigner, or just it's some band that was really popular, or some performer that was really popular some number of years ago. Kenny Loggins would be an example, but now not so much. I was a little surprised to see that Jerry had actually hit that spot on the ladder, on that rung, because he still is as entertaining and funny as he ever was. But people's tastes change, I suppose, and he's not breaking any new ground in comedy now, where he was many years ago when he became so popular, and he ran with Dean Martin, and all of that. A lot of that stuff was very groundbreaking. Today, his act, at least the last time I saw him, kind of a rehash of the same mannerisms and
Sure.
stuff. But it was just, I don't know, there was something about it when I saw the poster that with all the other list of B and C or B-list celebrities, there was Jerry, because in my mind he's still an A-list kind of guy and always will be. But to the younger generation, they maybe don't even know who he is. So.
Well, I got me personally, I got a tremendous amount of pleasure out of his movies when I was young. I really did. I'm forever thankful to him for the fun in the movies and the nice comedy and all that stuff, as I am to Get Smart, to Don Adams in Get Smart, which my family, my mom and I used to just have great times together watching dumb Get Smart scenes, which the whole show was a big spoof on the spy, the James Bond, and all that stuff, and it was a great program, and many people wouldn't know about that today. Max, what did he say? He asked me to take my knee off his chest. And who was writing in that was
Mel Brooks.
Who's the big Mel Brooks? You know, who's a comic genius. I mean, literally a comic genius, and he was just playing with that. That was just a toy for him. Get Smart, and you could really see later after he left the program, you know, it wasn't the same. You know, so.
There's a question from the audience. If you would render any opinions or thoughts on Priceline.
On Priceline, if you'll give me
it's
symbol.
PCLN.
PCLN, okay.
Yes.
Let's take a look at, well, Priceline certainly looks like it's doing very, very well. They have just a tremendous monthly move underway here, and yearly. Unless a person was short, I would think that this market has a lot in common with the S&P and the Dow, which we expect to top in 2014. You know, that's the on-time year. I would have to say, just at a glance, this looks very similar to me to the S&P, not exactly, but, you know, in the same theme that it is well above all-time highs, and it's in a very strong position. Now, if we wanted to, we could take some time and go over the market and see for ourselves if there is something imminent coming up, but I would want to tell somebody, and not that I know what our questioner is doing with this market, or maybe he's doing nothing, but I would want to warn people not to get overly anxious about shorting markets that are in runaway phases, because as we've talked about so many times, the runaway market breaks all the rules, doesn't it? We've seen it. It breaks all the rules. It runs all the ticks and dicks and deltas and everything else. It flips everything around, and it all doesn't work. So you got to be very careful trying to be the guy that, you know, I sold short Priceline at such and such. I think you'd be wiser if, and I'm not saying the person is doing this, but for anybody that might want to short it, I think you'd be wiser waiting some time, because there's going to be plenty of time and many opportunities to short this. You just may not get the absolute top. But when they run like this, month after month after month after month, I think you'd be wise to not short it and to believe in the upside. I don't have anything more to say on it right now. I think I would want to spend a little time with this to see if there's other factors that we could, you know, the markets repeat history, but how they repeat history is very odd, and it's not something that you would see or know perhaps unless you were lucky enough to see one of those principles in motion. But in this particular case, without having taken a look at how the market plays itself out and all that, I would want you to either be flat, be long, and avoid trying to short or pick a top in a runaway market. So that's about all I can say about it right now. With time, I might be able to put something else together here. So now, if Dwayne's not there, I can...
Yeah, I'm right here.
Oh, okay.
So what do you want to do?
Well, we can... any other question about any of this?
Let me see. There was a question that came in via email. Let's see. That was from Peter. It says...
Actually, it came in your post office. It comes in your mailbox. That's actually, you go downstairs and there's a question in your mailbox. Never mind.
I'm sorry. It came in my email.
Okay.
I wanted to ask David in which week of November he expects the long-term bottom in crude. That question is from Peter.
This week.
I want to ask David in which week of November he expects long-term bottom in crude.
Well, we have a couple things. It's the question. I can first tell you this, that we're 1 week late for 92.70, which was the forecast we made 2 weeks ago for crude. If they broke 96.50, they'd go down to 92.70. 92.70 was due last week. This is the 1 week late for it. I can reveal this now because we've come very close to 92.70. Anybody in the Williams Edge got this information, though. Today's low is 93.07. Having said that, there is one other big piece of information that I think is important in crude that we're going to be utilizing, and I need to see if I can find it real quick. But normally this week would be very important, especially if we reach the 92.70 or come very, very close to. We've come reasonably close, within $250 per contract, but I think there may be a little bit more left in it. Having said that, I'm also looking a little bit broader in terms of this larger decline that has occurred in crude as likely wanting to bottom in the month of November. So we'll see how that plays out. First things first, let's get rid of the shorter term stuff and clear that out of the way. We're 1 week late for 92.70. Let's get that out of the way. And then we can go from there and tie that in with the monthly bottom that we're expecting in November. And from there, we can put together the next trade, which would send prices up for several months. So the yin and the yang of the market, there's these forces that are at work, and they have a lifespan for a certain period of time. And when they've exhausted their charge, other forces take over. And when that force in its turn exhausts its charge, another force takes over. So the principle of these forces at work in the market would have the crude continuing lower to these numbers that we talked about, the 92.70 and so on, and a November bottom. If in terms of the practical side, in terms of actually trading this, if we see the kinds of signs that those forces have exhausted their charge, then we know in advance, at least in this particular case, we can't always say this, but we know in advance exactly what the next charge would be. And like I say, we can't know that in every single case, but what I can say is that the setup from such a low, a November low, would be a very powerful and important point to be considering long positions in this market, and for more than a very short-term trade, for something that could really pick up some steam and really be sort of an investment quality trade. So consider that, and we'll continue to talk about it. This is only Tuesday of this week. Let's see how they finish the week off with regard to 92.70 and so on, and then we can continue from there. But that's the information. All of this information was given out weeks ago, but I'm telling you now. But this is in Williams Edge, and if you want to see more of it, you're welcome to give us a call. We'd be very happy to have you take a look and see if this kind of stuff is useful in your own trading. Everybody has a different way, a different feeling. Some things don't work for people. Some things work really well for people. You have to be the judge for yourself whether going into longer term is something that you can live with, and so on. So there you are. That's my information on the crude. Hope that's helpful.
All right.
So I think and Dwayne, I think there was one last thing we were going to say, and then I'll scoot out of here. And I know you probably have your day ahead of you as well. We talked about the dollar, Canadian. I think was there one other thing I wanted to mention. We talked a little bit about copper. We're flat in that. We're waiting on. We're waiting on most of these markets right now. We're kind of the remaining markets that we would normally talk about. I will say that, just a moment here, we are also watching some other markets that we don't usually trade in, one of which is the Swiss franc, which is just another currency, but it's one that sometimes has interesting and tradable moves. So we're keeping an eye on that right now, just out of interest. So just keep that on your radar. I think that's everything that we have, Dwayne, for the listeners today, other than my charm and wit, which of course
that was good. That
is
was awesome.
in abundance.
As always.
Oh,
as always.
Well, thank you very much. Appreciate that. I think also, don't we have some important, or do we have important news coming out this week? That would be, or am I mistaken?
Let's see, tomorrow, what do we got tomorrow for news? Tomorrow on the news front, we have no high impact reports tomorrow. Let's see what we have for Thursday. So tomorrow's Wednesday. We've already looked at that. Now Thursday, we have GDP, which is a high impact report. Expect that to move the market. Now, here's another interesting, and see, this is why, guys, you want the toolbar, and this is why you want global economic reports. Okay, the European Union at 7:45 Eastern Time, a.m., here in the good old US of A, 7:45 a.m. Eastern, the Europeans are going to do a interest rate decision, okay, very much like our Ben Bernanke. You've got Great Britain, you've got the Euro.
That's what
here.
it was. That's what it was.
Okay, there's
Yeah.
three heads. That means it'll probably, right there, it says it on the pop-up, high volatility expected. Then you have the ECB press conference. They're sort of doing the way we do it now, where they have the interest rate decision, then they hold a press conference. Well, right on the heels of that, while the ECB press conference is happening, we have continuing jobless claims, which is only moderate volatility, followed by GDP quarter over quarter, which is a high volatility announcement, and then another medium volatility, and then another very high volatility news, economic event, initial jobless claims. This is really the one that everybody's watching for this week, and then also the one that will come on Friday. So this starts tomorrow at 7:45 in Europe, 8:30, 8:30, 8:30, 8:30, 8:30. So be very careful trading pre-market tomorrow. Now, if we drop down to Friday, also at 2 o'clock tomorrow afternoon, ECB President Draghi speaks. Now, if you remember, over the last couple of years, Draghi's comments have moved world markets, global markets. Okay, so what he says tomorrow afternoon, it may not be quite as impactful for us here in the U.S. as Bernanke speaking, but I would encourage you, unless you're a news trader, be flat and just watch this. And then on Friday, closing out the week, we have non-farm payrolls, which is a high-impact news event. And then we have the unemployment rate, which is also high impact. There's a slew of news on Friday, but the only, nope, there we go. Bernanke speaking, high impact, tomorrow afternoon, Friday afternoon at 2:30. Now, that doesn't sound quite right. As head of the Fed, okay. Now, we got faked out one time when they said Bernanke was speaking at an odd time, and it turned out it was just like some kind of dinner club or something where he wasn't speaking in an official capacity. So we need to check this out. For the Fed chairman to speak on a Friday afternoon at 2:30 Eastern, that's not normal conditions. So we'll find out between now and tomorrow.
Yeah, that was the thing I was talking about. I knew we had something like that with the interest rate.
Yeah, ton of stuff
Yeah.
Thursday and Friday. So not only here, but in Europe. So these markets could change. This move we're seeing in the bonds, the big move in the bonds, that might be
a precursor. That's a good point. That may be a precursor to it.
And for those of you that participated in the trade that I just sent out to everybody that's on the list, to consider being long from 60 to 62, congratulations. I would suggest that you take some or all profits here. At least take some and get your stop to break even. If you're going to trail a little bit, well, you got your two. So I'll let you figure out what you're going to do with the rest of it. But if you look left, okay, then where does that put us? That puts us above the high of the day. And on a daily chart, see where that puts us? Okay, that puts us right up against yesterday's high, which was 64. And today's high so far, 64. We just tagged 62. So, and see already, we talked about this. The sellers, they come in a tick or two before. Why? Well, because they had a nice little run here, pushing it down. And so this was a golden opportunity. Okay, we had a swing high of 62 to the tick, all right? So you had to be poised. You know, we gave you an entry, 60. We gave you an exit, 62. You had to be poised to take that exit, or else you may not get it. You might ultimately get it, but you may have to suffer a drawdown. That drawdown could stop you out. And that's just an important point to make to all who might be new to trading. See, price really did go up to 1762. If you had an order to sell 62, there's no guarantee that you were filled, okay? Now, we could look at time and sales and see how many contracts got through at 62. This thing needs to tick up to 62 and a quarter to assure that everyone standing in line got filled, okay? And sometimes when people make the transition from simulated trading, because some simulators out there aren't real good and they're not simulating the real markets. If it touches it, it just automatically fills you, and then the harsh reality of when you go live hits you that that's not always the case. Until it trades through a number, okay, there's no guarantee that in real life you were filled, okay? Now you can do things like market if touched orders. You can just manually get out. Any number of ways to handle it. The most important thing, or the thing I want you to take away, is touching a number doesn't mean, whether you're buying or selling, doesn't mean you get filled just because it touches the number. So it's got to trade through it to guarantee the fill. All right. Anything else, David? Or are you taking?
No, I'm fine. Thank you guys for the questions. I appreciate them. Dwayne, as always, I hope you guys have a wonderful day. Thanks for having me on the program, and I'll see you guys tomorrow.
All right, buddy.
Thanks again. See you soon.
Bye.
I didn't notice what time it was. All I know is that I fell in love with you. And if all my dreams come true, I'll be spending time with you every day.
Okay. That's going to about do it for us. Unless you have a question. If you got a question, I'll stick around and answer it. Does anyone have any questions about the trade that we just sent out, the alert that went out? Now, I put it, and I mean, I want to show you how this went down. Okay. I started out here on our Google Plus page, okay, for the Emini community. And let me pop this number into the chat box so that those of you who are not yet on board, you can get involved with this community and be a part of it. Okay? Be a founder. And send to all. Okay, so now everybody has the link to the Emini community. See, we're just getting this thing going. We've only got 44 members in there so far. You have to apply, and then I just automatically approve you. Only reason there is to just keep out, you know, like these automated bot accounts and that kind of thing. I'm not going to do a background check on you. Just request, hey, can I join? And then I just approve you, and boom, you're in. Now, backing up to here. Let's refresh. Okay, at 11:58 a.m., that's my time. The message went out to consider being long, 1760 to 62, if the opportunity presents itself. Okay, so once it went there, then it goes to Facebook, then it goes to Twitter, then it goes to our Seeking Alpha, then it goes to StockTwits. It gets spread out all over the internet, a million ways to Sunday. But if you want to be notified forthwith, however that goes, go with the Google Plus, because you can set it up so that you get an email when I post. You can get it sent to your phone. There's a little free app that you can download, Android and iOS, Google Plus, and just go to your App Store or the Play Store and just search Google Plus. It'll pop right up. And make sure you get the one from Google, not some other, third-party thing. You want the real deal from Google. It is 100% free. You put that on your phone, and then you set that thing to vibrate, and so whenever a tweet or an alert or a message comes through, your phone will go, whatever you tell it to do, chirp like a bird or a cricket or whatever, and you're alerted to the trade, and you're able to participate in the trade. Okay, so I'll be watching this afternoon for any requests to join so that you'll be a part of whatever we happen to do tonight. Okay. Last night went very well with the bonds. The S&P tweet we had out, we always look for a minimum of 2 points. Now we said a potential target on that trade would be the zone, the weekly trading zone, but of course initially we're always looking for that 2 points. Okay, that's our daily bread kind of a thing. But once that happens, okay, then you're in territory where you've got to actively manage your position. You need to have your stop to break even or better. You need to trail. You need to be aware of the average true range so that you can gauge how much you need to trail by. There's just a number of factors involved. Okay. Having an entry and an exit, if you use DT Pro, and if you are if you're charting with DT Pro, hang on, let me grab this message. Okay, I don't need to type. Mr. Chan, what you have to do is go to the home page of CFRN.net, CFRN.net. On the right-hand side of the page, click the microphone, follow those instructions, and you'll be able to see the charts through the end of the month. Okay? Everybody has to register once a month. Now, the show is almost over today, so I'm guessing you're probably in a different time zone, but please do come back tomorrow at 12 noon Eastern. We're here every day from 12 to 2 Eastern. That much is guaranteed, and then some days we run over by an hour, sometimes as much as 2 hours. Depends upon who's hanging out, who's in the chat room, who has questions, etc. So hopefully that answers your question. Let me just tell you, I just answered you on air. All right, so back to charting with DT Pro. It's going to make a really good point. I'm having a David moment now. I forgot the really good point I was going to make about something. The heck was it? I forget. Oh well. Oh, I was talking about the Google Plus. That you wanted to. Oh, that. Okay, and then I was telling you that you could make your phone buzz, like mine's doing over here. Whenever I send out a new alert to the Emini community, your phone will buzz. Now, you can tell it not to buzz. You can be selective. You can turn it on and off. Maybe you don't want your phone buzzing at night. Well, you can shut your whole phone down, but maybe you leave your phone on at night so that emergency calls can get through. So you can go through with different apps, and you can selectively turn them on and off. I know you can on the iOS phones, on the Apple. I'm pretty sure you can do the same thing on an Android. Okay, if you need any help with that, let me know. support@cfrn.net. You can call us 949-42-EMINI, 949-42-EMINI. 99% of the time, that call is going to go to voicemail, 949-42-EMINI. Don't hang up, okay? Leave a message, name, number, how we can help you. The machine is going to send Michael and I both an email immediately, okay, with not only an audio recording of your message, and let's say we're in a meeting somewhere and we can't, listen to the call because that would be rude. But our phone will vibrate, and we'll open it, and we'll be able to read the message you just left. If it's a true emergency, we'll step out of the meeting or wherever we are, and we'll call you. Otherwise, we'll call you or email you as is appropriate as soon as we can. So when you get the voicemail, don't hang up. Okay, that's just going to delay the process. Leave the message and then stand by. In most cases, one of us will get back to you, usually in a couple minutes to an hour. 949-42-EMINI. Now, if you want to call and have a real person, a real cheerful person, answer the phone, 866-928-3310. 866-928-3310. That's Leslie. In most cases will answer the phone. Sometimes Bert will answer. You can speak with either one of them. Bert's pretty cheerful, but Leslie is, if you just need somebody to brighten your day, just make you feel a little better, call that number. Just say, hi, Leslie. I just needed to hear a nice, happy voice. And she'll ask you how you're doing, and she'll chat with you, and then she'll go, now what do you want? And if you need to talk to Bert, she'll put you through. Most of the time, she can answer your question. Okay? That she don't think she's just somebody that answers the phones there. No, no. She's a trader. She's a writer. She's a broker. She's got a lot of talents, a lot of knowledge about the market. She used to be a broker for one of the original turtle traders. Okay, that's going back a couple of years. But sure enough, she was. So she's seen a lot happen over the years. She writes a newsletter each week called The Gold Digger. Okay, The Gold Digger. Just give her a call, 866-928-3310. And between Bert and Leslie, they can answer any of your questions about the platform. They understand how we trade. They'll go out of their way to help you because that's just the kind of folks they are. Now, are they trying to earn your business? Well, they are. They absolutely are. They're trying to earn your business. And as hard as they work to earn your business, once they earn it, they work twice as hard to keep it. I'm serious. This goes in almost every line of business, every area of industry. It is much more cost-effective and on so many levels more desirable to maintain an existing client than to have to go out and find a new client to replace the one that fell off the bus. Okay? But they understand this. You know, this is how they earn a living, both by trading and by being brokers. See, they have a dual income stream. This is something that a lot of you traders have a hard time understanding. Go read any of the Creating Wealth books. I'm talking about the great books that have been written by people who really did it. Read stuff by Warren Buffett, you know, not some, you know, phony baloney thing, you know, floating around. You know what I'm talking about. Something reliable, respectable, somebody that, you know, you're aware of their successes. Go read books that they've written. And without fail, at some point in their book, they're going to talk about having multiple income streams, that it's critical. If you're building wealth for the long haul, okay, we're not talking about an intraday day trade from 60 to 62 where you pick up 2 points. That's just one brick in the wall. Right now I'm talking about the whole wall, okay? They're going to tell you that it's important that you have dual income streams. So for Bert and Leslie, they're traders and brokers. Michael and I were traders and educators, okay? You might be a trader and a landlord. Maybe you own some real estate, okay? Maybe you have some other type of business. Maybe you own a restaurant. I just happen to know that we have a couple of restaurateurs as partners. We have pilots. We have doctors and dentists and lots of engineers, okay? And just because they're doing well at trading doesn't necessarily mean that they run out and quit that other job, because then they would have to find yet another job because the masters say you need multiple income streams, okay? So think about that, and when you do call Bert and Leslie, remember, if you let them know that you're a part of the CFRN audience, they understand what we do. They understand our tools. If you need help with the charts, just let them know you came from the audience. Now, I'm not saying that because we want them to know that we sent you as a hot lead, because we don't get paid for that. If you become a client with Daniel's Trading, we don't get paid for that. If you start doing transactions with them and you're generating commissions, okay, that is all Daniel's Trading. We don't get any kind of a kickback or a percentage on the commissions that you spend. Now, those types of arrangements are quite commonplace. Certainly not illegal or immoral. I think they should always be properly disclosed. They're not always, but in good conscience, I think someone should. So we could have gone that route if we had, wanted to, but we decided that we wanted to keep the relationship just really clear and really transparent. So when we recommend them as brokers, we're saying it not because it's going to line our pockets, because we're going to get a kickback. We're saying it because we actually believe that they are the very best at what they do. Whether you need director or broker assisted trades, in other words, you need help putting on your trades, or you need someone to put on trades for you, they can do that. If you plan to be a self-directed trader, where you just occasionally call in with, questions, you're looking for an idea. Once you become a client, you can call up and say, hey, Bert, I'm looking at the S&P, I'm looking at the Dow, what are you seeing? And he'll tell you what he's seeing. He might tell you that, hey, I'm getting ready to go long at this price or go short at this price. I mean, they're licensed and qualified. So give them a call, 866-928-3310. All right. Iris asks, the ES trade you have on the screen, why did you use the 2-minute chart versus the 4-tick chart? My 4-tick chart doesn't work today. Is that the reason? No, as far as I know, Iris, my 4-tick range chart is working fine. The only reason that's showing on a 2-minute chart is because when Mike Reed was on and he was talking about the areas that were important for him, I had it originally on a daily chart, I think, and then I went to an hourly, and then I broke it down to 5 minutes, and then he asked me, he said, you can best see what I'm talking about on a 2-minute chart. That's why I went to 2 minutes. Normally, you won't see me using a 2-minute. I can use a 2-minute, and I want all of you to know that you can use any time frame, okay? There's no magic number. You may get comfortable with a particular number, like we're very comfortable with the 4-tick range, and we have reasons why we use the 4-tick range. Just as Mike Reed has his reasons why he likes a 2-minute. Other people use a 10-minute. Some people trade only the hourly. And it's what you get comfortable with. It's the one that really speaks to you. And you go, I get that. I see that, okay? And so I could have taken this trade off of a different time frame. I just happened to use the one that was in front of me. And as I was looking here, price had dipped down into this area here. I put a timestamp because David had the charts when I sent the tweet out to everybody. David had the charts. So that's why I put this little timestamp, 11:55. See, it's exactly 1 hour ago. Now it's 12:55. So back at 11:55, where were we? That's 58, 56. Okay, this candle's 11:56. This candle here, let's see, that's 11:54, and they're 2-minute candles. Okay, so the spot was right there. That's where we were. Okay, and I had drawn this little square or rectangle around price action. What I was doing is I was catching the tops here. I was catching this last little bottom right here. The next square was catching this bottom and these bottoms. And because there wasn't enough room in there to put on a trade, that's why I had typed in The only trade that makes any sense here is a long. Now, just because the only trade that made sense was a long did not mean the market was going to magically rally for me because I could see a long trade happening. It just meant I had no interest in being short until, and I sent a tweet out on this, until we get below 54. This here is just too congested for me. I might take additional long trades if they set up, but I don't want to get short until we get below 54. Now, if we trade substantially higher, then I might start looking at some shorts. But for now, if we don't put in any new highs, it's in the tweet to consider being short when the opportunity presents. And at some point, it will present. So I was looking here at this 59.50 area. Okay, I was looking at these tops here. Okay, I knew I wanted to get long above 60. Okay, but I also knew I had to be out before this swing high at 62.25. So hence the trade to consider being long from 1758, or from 1760, I'm sorry, from 1760 up to 62. Now, do you see how that worked? Okay, the swing high was 62. Sellers came in one tick early. You hear me talk about this a lot. So if I'm talking about it a lot, obviously it's not an uncommon occurrence or an uncommon event. Okay? It's the nature of people. It's the nature of buyers and sellers. If you were at any kind of an auction and there was some particular thing that you wanted to collect, I don't know, a Babe Ruth baseball card, a certain year, his rookie year or something, and the last time you were at an auction, that particular card sold for $1,000, okay? As the bidding process starts, you might not want to get left out, so you get going right away with a bid. You know, you jump in before the value line is even established. You know, you just want to make sure that you're a player, that you're recognized, that you're participating. Okay, and in trading, no one wants to get left behind, and we've all experienced that. Okay, I want to make sure I don't get left behind, because the last time we touched 62, 62.25 actually, look at the nice little sell-off we got. The initial move was down to 62 points, and a retracement, and then an additional move down to 58.25. Okay, so that was 62.25 to 58.25. So this was a nice 4-point move down. 4 points it's good money. It's $200 per contract. So to anticipate buyers to come in early is reasonable. Okay. Now, if there's more buying pressure than there is selling pressure, it is certainly possible for price to just race up through here and take out that high. I mean, we're putting in new highs and new lows all the time on smaller time frames. So this trade, to be long from 60 to 62, it hit 62, but so far it hasn't traded through it. Now, you could have still exited up here at the top, and if you brought your stop to break even at 60, you still, the swing low has been 60.25. So if you brought your stop to break even plus a tick, you got stopped out. Depends on your entry, and it depends on if you entered as the crow flies or if you entered using the slingshot. Number of variables there. But I want you to understand the reason for the trade. That's what's most important. We needed to get above this area here before we got in, and we needed to get out before we hit this number up here. Okay, so that defines our window of opportunity. Okay, and that's all we were doing. We're not particularly bullish today or bearish, and the market itself is neither particularly bullish or bearish. It seems kind of comfortable going sideways. So all we did was take advantage of the little range that has set up between this swing high and this swing low. And as price made the turn here, or as Mike Reed, the term he used, transition, okay, I want you to look at this over here. He said this was his transition earlier today. Okay, price is coming down, swing low, retracement, lower low, retracement, lower low, retracement, higher low. Could this thing be turning around? Okay, this is your first indication right here, because based on the way this thing has been going, lower low, lower low, lower low, all of a sudden not a lower low. So then you ask yourself, okay, is this simply a deeper retracement or is it a reversal? Okay, his trigger to take action was here, but this line that I drew here is where the question really got answered. Okay, and this strong bullish bar here taking out that area made a very strong statement. Also, look what price did. It came back to test the important price or the important area. As you know, we're real big believers in price doing that. Coming back to test important prices in important areas, it almost always does. And so we're watching these legs coming down, and then all of a sudden we don't get a lower low. We get a higher low. So now we've got to look at it through this lens. This is the first potential leg of an uptrend, a retracement, and then big leg, retracement, leg, and now what do we have here? Meandering, deeper retracement, or reversal. Okay, the market is still sorting all of that out. Okay, I'm glad that I had this 2-minute chart up though from when Mike was here, because it just makes a great point that you can use any time frame that speaks well to you. It can be tick charts, it can be range charts, it can be minute charts, it can be volume charts. One of my very favorite charts for the S&P 500 is a volume chart, the 10,000 contract chart. I love the way that thing lays out. Instead of getting a new candle every 2 minutes, with the 10K chart, you get a new candle every time 10,000 contracts change hands. So let's say it's a day where 1 million contracts trade on the Globex session, and that's the entire 24 hours. Okay, if it's a 1 million contract session, if you get a new candle every 10,000 contracts, that's going to give you 100 candles over the course of the day. And if it's a 3 million contract day, if volume for the day is 3 million shares, trading hands, then you're going to get 300 candles. But I really like the way that flows, and it works beautifully with the CFRN indicators. In fact, when we first began the educational arm of CFRN, we primarily traded the 10,000 contract chart and the 2100 tick chart, not a range chart, but a 2100 tick chart. And the 10K and the 2100 tick often look almost identical to each other. Depends upon the volume, participation that's going on in the market. They can look very similar. And I think they are simple to trade. Nothing complicated about them. Now the 4-tick range, the reason we migrated to the 4-tick range was because it allowed us to know where the next bar is going to open. Okay? Now we're only risking 8 ticks per trade. Each candle on a 4-tick range chart is exactly 4 ticks high. So once a candle opens and puts in a bottom, As long as the price doesn't go any lower, we know exactly at exactly what price that candle is going to close, if it's going to be a bullish candle. And then we can have our finger on the trigger and be ready to enter, okay, on the open of the next candle, if we have a setup that's calling for a long trade, or vice versa if we have one setting up for a short trade. Okay. All right. Let me go to the chat box real quick, see if anybody else has a question. Richard, on the S&P, can you go over it again once quickly? For us, I kind of did. We're caught between two weekly trading zones right now, and we're waiting for that decision for the market to make up its mind which way it really wants to go. We don't have any clear idea yet. We just know that we're willing to be short below 1754 per the last tweet, and we wanted to be out of the market before we hit 62 and a quarter, and that's why we picked 62. Okay, don't see why you had to exit before 1763.50. Well, the swing high over here is 1762 and a quarter. So if I want to get out before the sellers step in, I've got to pick some spot that I'm going to exit. So that's why I picked, and I didn't have a lot of room to work with. I had to get above the noise here to enter, because what I want is I want a window of opportunity where there's not a lot of obstacles to my trade. Okay, and so the best down here, it was too noisy. Okay, so the only trade that makes sense is a long. But that doesn't mean the market will rally. Okay, so from 60 to 62, that was a clear window of opportunity for me. Okay, I was getting out before the selling came in, which it did right on cue. They stepped in one tick early, pushed it down. So far, they've only been able to take it down to, see, the swing low is 60 and a quarter, and it looks like we're going to get that 62 and a quarter. At least it's certainly going to try. Okay, and so if we put a line on our chart right here, the entry, I'm not going to be able to get that. Let me just get rid of this. There we go. The entry was here at 1760. Okay. Now that whole thing about price coming back to test important prices in important areas, look what it did. Buyers stepped in early right here. Sellers came in early here, pushed it down. Buyers, they're fighting back. They didn't let it come all the way back to 1760. They came in at 60 and a quarter. And now they've pushed it up to a high of 62. Okay. And you see that resistance they're running up against right there? Pretty confident they'll make it, but you never know for sure. You take what the market provides, what it makes available, and you want to try to do that. You know, when you pick out these high probability areas that you want to trade, you look for obstacles. You know, where are the sellers? Where do I know? Now they can be anywhere, and anybody can change their mind at any time and say, I want to sell the market. But the market tells us right now that there are sellers sitting up here at 62 and a quarter, and that if that price gets touched, they're going to, like a big bear, you know, big bear paw, they're going to do their best to swat that thing down. We also have fresh information that buyers are willing now, before they were willing to step in at 58 and a quarter and buy the market. But on this little pullback, we found out that there's now a new set of buyers that is willing to step in at 60 1/4. Okay, so we have right now a battle going on between those who are willing to buy at 60 1/4 versus those who are willing to sell at 62 1/4. Say that again. There is currently a battle going on between the people who are willing to pay 60 1/4 to own an Emini contract and the sellers who are willing to sell you contracts at 62 1/4. Now, until the number of buyers outweighs the number of sellers, or vice versa, this thing will ping back and forth, back and forth, back and forth, until you either have more buyers than sellers or the volume of the buyers exceeds that of the sellers. There'll be a tipping point. Okay? It won't go back and forth forever, but it could go back and forth for an extended period of time. See, it's now 3:12 in New York, so the market still has another 45 minutes left to trade. Now look what we've got. We had the swing high at 62 1/4. Now we put in a little double top on a 2-minute chart, okay, at 62 to the tick. Who's going to win this little mini battle? Well, whoever does, then it steps into another battle. You blow it out to a little bit larger time frame. And then you see where the next battle is. And then you find your window of opportunity. And that window of opportunity, if we're going to use, battle lingo, jump out of this foxhole and advance to the next foxhole where you dive and take cover, also known as covering your position. You're long 60 and you cover your position at 62. Or you're short 62 with plans to cover your position at 60. Okay, great. So that did help. All right, yeah. Anytime I say something that you don't understand, just ask me to say it again, and I'll try to say it a different way so that it'll make sense, just like it did for you, so I'm glad that it did. And then if I'm not able to get the point across, we'll get Michael tomorrow morning to give you his version of it, or in a partners meeting, we'll talk about it in depth. So don't ever want you to go away with unanswered questions. That's what we're here for, okay? We want to give you as much information as we possibly can, because if you are coming to CFRN, the Christian Financial Radio Network, it tells us two things about you. One, in most cases, what your belief system is, and that's not always, but secondly, that you have an interest in learning how to trade. Or you already trade and you enjoy it, and you just want the fellowship of fellow believers. So either way, our doors are open to everybody. If you don't believe, you're still welcome. If you believe differently, you're still welcome. If you don't trade, you're still welcome. We'll probably bore you to tears, but you're welcome. Okay? And so, those people who come here looking to learn, we want to give as much information as we can, because the markets are real. They really do move enough each and every day that once you have a basic understanding of how the markets flow, you can find your windows of opportunity in whatever market it is that you like to trade, whether it's the S&P or corn or soybeans or gold, or maybe you're still, doing stocks. These same principles apply to equities just as they do to futures, just as they do to options, just as they applied to rice back in the day of the Japanese rice traders when candlestick charting was first introduced, discovered, created, invented. Okie doke. I don't see any other questions, but thank you all very much for your kind comments. I do appreciate that very much. Oh, and Kyle mentioned there's a USDA report on November the 8th. Okay, today's the 5th, Tuesday. see. So that's Friday. You know what, Kyle? Now that's interesting because that did not show up on my, did that show up on my calendar? Let's go back to Friday. Friday. You know what? I'm glad you pointed that out. Now Friday is the 8th. Yeah. So make note of that, guys. It looks like agricultural reports do not show up on this calendar. Thanks for letting us know about that, and we'll be watching for that. Now, a USDA report, guys, that'll affect soybeans and corn and wheat and any number of things. Actual products that farmers grow and that you and I consume. And we talked yesterday, I think, about soybeans are used for, much more than just food these days. So we'll be watching for that report Friday. I encourage you to be flat ahead of that. Not in the equities, because what I've not seen is any type of agricultural report. There may be times when it affects the indices, but I wouldn't see any direct connection there. But certainly if you're trading any of the agricultural products, you definitely want to be flat ahead of a USDA report, unless that's your specialty. That's what you've been in training for, is to trade the news. It's not something that I try to do. I tried to do it in the beginning, and I saw pretty quickly that, I got it right sometimes, and then other times I wouldn't. And so I was really putting myself in danger, in harm's way, needlessly, because I couldn't be consistent enough with my results to call it a living. So then let me find another way to put on a trade, whether it's, with whatever method you've found and that you use. If you've not found a method, you're still looking for a way. I think that from our track record, which you can see in video format on our website, I pointed out that link earlier. I'm going to put a bunch of links in the chat box when I close out the show, from the Facebook page to the Twitter page to the Google Plus pages, all the important phone numbers. I'm going to put all of those in the chat box. So if there's any of those links that you need and don't have, by all means, copy and paste those, save them in a folder somewhere on your computer. And we do invite you to take a free trial. If you go look at the video recaps, there's a pretty good, pretty consistent track record there over the last 2 years. Our Twitter timeline is public. You can go and see every tweet we've made over the last 3 years. I don't think we were incredibly active that first year, but for the last 2 years we've been extremely active. And so you can pull up your charts and you can just go look at, go back a year and a half, wherever. Pick a trade, go look at some historical charts, see how it played out. Chances are I did a follow-up post that told you exactly how it played out, whether it ran to target or got stopped out. I always try to do a follow-up post on them, but every now and then I miss one, and so that's the beauty of historic charts and historic timeline. You can go in for yourself. Okay? Now, you still are basing everything on what's happened in the past. And we know that past performance is no guarantee of future results. That's just a fact. Okay? So as much as I would encourage you to go into the video vault there and look at those video recaps and go look at the Twitter timeline, even more so, I encourage you to come, take the free trial, and watch us trade live in real time. It's real money in real time in front of real people. As we're trading, we answer your questions, and we'll talk about the trade as it's setting up. Okay, we're looking at crude right now. Here's the chart. We just got a bullish cross. Price has pulled away. We do have bullish divergence. We're just now waiting for a pullback, and we'll see if we can get an entry here, and we'll be long crude. And then we wait, and as we finally narrow it down to one candle. Okay, if this candle closes at this price, because we know each candle on that chart is only 4 ticks high, So we can say with certainty if it closes at this price, then we're going to buy the open of the next candle, which will be this price. We know that ahead of time. Everyone does, from Brooklyn to Bangladesh. No ambiguity. To the tick, we know the entry. Okay? That's important. Now, in the mornings in the live trading room, Michael trades with an open-ended target. He always has an 8-tick hard stop. Never risk more than 8 ticks on a trade, and as quickly as possible he gets his stop loss to break even, and break even plus a tick. All right? Does that mean he gets stopped out more than we would like? Yes. It also means that we don't too often have to take a full 8-tick stop out. Okay? It's much easier to recover from a 4-tick stop than an 8-tick stop. Twice as easy, mathematically speaking. So if you've not taken a free trial, or you've not taken a free trial in the past 6 months, and you would like another shot, you'd like to come in and take a look again, and maybe this time actually show up every day, ask lots of questions, watch the 5 hours of training videos that we provide, download the platform, install the indicators, and actually put on and take off trades during your free trial, then we'd love to have you. Okay? If you're the second chance guy, send me an email, support@cfrn.net. Hey, took the free trial before, blah, blah. I'd like to take it again. I'll go in, I'll set up the computer so that it will let you back in for a second chance. Okay? And if you've never taken the free trial, just go to cfrn.net/apply. I'm going to be putting that link in the box here in a few minutes, so if you want to just wait and click that, that'll be fine. But go there, take the free trial. Now, you get 5 days, so if you start on a Thursday or a Wednesday or a Tuesday, doesn't matter, you still get 5 trading days. Plus, you get the entire weekend to get familiar with the platform. Okay? Spend some time with different time frames and different instruments, you know, things you might have never looked at before. Soybeans and gold or the euro, that might be your forte and you don't even know it yet. But as soon as you start looking at the charts, you go, hey, I get this. Hey, this actually makes sense. So we invite you to come, spend some time, but if you're going to take the free trial, I really want you to apply yourself, okay? So that at the end of the 5 days, you're able to make a well-informed decision as to whether or not what we do is going to work for you. Now, if it's not going to work for you, we can still be friends forever. You can still come hang out with us on the radio show every day. Absolutely. We want that. That's a community. But if what we're doing and the way we're trading and the way we're racking up those couple of points day in and day out in the live trading room, if that's appealing to you, and if you feel that you can do it because you've been doing it during your free trial using the simulator and our indicators, you've already, see, I'm not convincing you that you can do it. What I'm inviting you to do is to come and convince yourself. See, that's critical right there. Because if you put the tools to the test and it turns out you actually can do this, I don't have to twist your arm to try to get you to become a partner. I can't stop you from becoming a partner because it's the very thing that you've been searching, seeking, hunting, trying to find ever since your journey began. Now again, what we do and how we do it is not going to work for everyone. People have different risk profiles, different personalities, different pain thresholds. There's a whole lot of things going on. But again, in 5 days, 5 days goes by pretty quick. In 5 days, you can know if this can work for you, and if it can't, then you know you've got to move on. Again, you can still be a part of the audience. Come hang out with us each and every day. We want you to do that. But get on that free trial, okay? These are the good old days. The markets are presenting some tremendous opportunities. In the indices, and the bonds, and even in the agricultural products. Had a very nice trade this morning in the soybeans. So if you have any questions, as always, support@cfrn.net. Toll free 866-928-3310 and 949-42-EMINI. 949-42-EMINI. Look at what happened just now on that test of 1760. It failed. Who won that battle? Sellers. Okay. Now look left. Where do you expect support to come in? It's right there. If we get back above 60, I like the idea of being long, back to 62 again. That would mean this was simply a little deeper retracement. Perhaps we go down to the bottom of the range and then make a run back to 62. If we take out the bottom of the range, then I start looking at that 54 number down there, because remember, if I'm going to like the idea of being short, I want to like it below 54. There's too much noise in between here and 54. If you wanted to trade 60 to 58, there's not quite enough room, because the swing low right here is 58 and a quarter. So if the buyers come in early, let's say they come in at 58 and a half, okay, and I'll leave this chart up. Some of you may have never watched a 2-minute chart unfold, and so I'll just leave this up for the rest of the session. We don't have that much longer left, only a half an hour. I'm still getting adjusted to the new time schedule, because for you guys, when you go off of daylight savings time, nothing really changes. But everything changes for me, because my livelihood and everything that I do revolves around the markets on the East Coast. And so most of the year I'm on Pacific time, but for this 4-month period, I guess it is, October through March, whatever, I'm on Mountain Standard Time. And so I'm normally done with the radio show by 12 noon Arizona time, and now here it is 1:30, and I'm still talking. So I got to go. All right? Thanks so much, guys, for tuning in. Wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.